Good morning, traders. How we doing? Guess who's back in the hot seat? It's your boy, Money Mitch, of course, ready to get after the day. It's going to be another bright day here, guys, and I'm excited to get into the trading action. And it looks like, yes, I know, I missed the market for 2 days, and what happens? The takedown, of course. And there it is, some hard down action coming in. But something tells me the big trade is on, and the big trade is not to the downside. I'm here looking in, thinking we got ourselves a bull type of day. TQQQ is my best shot out there today. You'll learn more about it right now on the playbook. We'll talk about what's going on out there, but the big trade on. And I think it's the rebound here. We'll see what happens. Nvidia already getting a nice little move from that 128 to 132. $4 move already. Guys, I'm excited to get after the show. You guys out there, smash the like. Let's get some traders in here. Let's get some more traders, of course. You guys tuning in on X, do me the favor. Hit the retweet right now. Hit the like button. Let everybody know, or hit the comments and drop in a ticker that you're watching today. Is it a small cap? Is it a mid cap, large cap? We trade them all here. We don't discriminate on price here. We definitely get after all the stocks in the market. And if you guys are excited to get after it like I am, let's get after it. Throw those stocks in the comments. I want to see some comments jumping in here. Let's kick things off. Let's get to today's playbook action and see what's up my sleeve. All right, traders, let's go ahead. Let's take a look at what's going on in the playbook. We'll go towards the stock action. We'll take a look at different stocks out there and see what we can come up with today. But like always, guys, the playbook is all about what? It's all about trying to find stocks that make sense on the day, right? What am I going after, right? What am I going to get, right? Well, today, not looking too bad. Let's get after it. The first one I'll talk about is XLF. And the reason why I think this is my best pick overall, I got a couple of stocks, but overall, I'm also looking at sectors and industries. And the financials is one that I believe in. Now we've gone from the top of the Bollinger Band back down to the bottom end, and now have pretty much a double bottom here to work off of. Of course, you can see the MACD has been pulled back, and it does look a little bit bearish there. But what I'm looking at is more the weekly approach. And then I look at this like, okay, well, we're making a pullback. We're holding off of this support here, right off of this level. So as long as we don't break kind of the 50-40 level and we're kind of holding this trend pullback, we're still looking good to catch the 9 EMA weekly here and then get back there towards 52, 53s. I think this is one that I'll definitely keep an eye out. And it's not just this one, right? We can take a look at different action here, whether it be the banks with JPM, right? Maybe it's Bank of America. They're all in kind of the support area. I like Goldman Sachs and Morgan Stanley. Goldman Sachs chart looking a little bit better on the weekly. Take a look at the daily, and it doesn't look pretty. But that's what happens a lot of the times, guys. The dailies and weeklies are something definitely to take a look at. And you guys, let me know, is this on your radar today? We'll keep an eye out on the action. We got a lot to take a look at here. Let's keep moving in today's playbook. Next one up, we'll talk about, of course, the stock that everyone's watching today after the bell, Nvidia. And what will happen there, guys? Will we get the continued upside, or will we see a turnaround? Of course, this stock was making a nice little run in February, went up there about 21%. Recently, with the downturn in the market, only really pulled back about 7%. So pretty much half of the rally, right? It does still look good here to hold the 126 support and get right back up to where it was, where it filled the gap, right? So this is the area of interest for me that I'm really focused on. And I want to see what happens in that area and see if we can lift out of this. If you actually take a look at the MACD, we've crossed over and we haven't really gone back, right? So we're still looking good here. Let's take a look at the RSI here. You can see how RSI was hanging out near the top, but we have kind of like this triangle that's been happening, right? This tightening down, and the same thing on the bottom end, right? Where you got the tightening down. Now, I think this still leaves room for a move where it can go back towards the 90. on the RSI. So even though I'm not the biggest proponent of NVIDIA for 2025, I still think that this has some ability to get another lift off of one last surprising earnings report. After this, I think definitely just the way that things are looking and the slowdown that we're starting to see, there's still going to be rampant talk. And of course, all the focus is going to be on the Blackwell chip talk. That's what you need to be watching if you're looking at NVIDIA's earnings tonight. Yeah, the numbers will be scrutinized, but what's the focus? The focus is that Blackwell chip and the demand that's coming for it. So keep your eyes on the action here with NVIDIA. I'll be watching, of course, to see if we get an upside break today and just start showing that, hey, let's do this before the earnings come in. Can the investors come in and actually get this to lift back down towards, let's say, 128? That's going to be where you got your washing action, and it could be more of, hey, let's scare them out and maybe buy it at the close. So it doesn't mean also that you got to get it at the open here. I think it's important to just watch NVIDIA overall today, because a nice ramping pace with the market coming back and NVIDIA leading the action is something very much that could happen today. We'll see what happens there in NVIDIA. And of course, let's take a look there at one last play here. Of course, one of the plays that I was even looking at this morning, which was just to buy the TQQQ. And you can see we've already kind of gotten a nice little lift. Now we're starting to pull back as we get closer to the traders that wake up, right? The early traders making the day here, guys. As you can see here at 4 a.m., what did you got? You got a nice bearish pattern that actually broke out of that bearish pattern. So you can see here, this was a bearish pattern right here, because if I scroll back and I keep it like this, I'm sure you'd think it's even bearish, right? Seeing that bearish action, then seeing this morning at 6 a.m., this is what I mean by those psychological reversals, right? That we're looking for in the day trading action, where the setup unnecessarily here, right? If you just showed me this as a technical analyst, I'm going to tell you short that stock right now. But here's what really happens, right? This is why technical analysts and psychology need to be at play here. And you can see the turnaround right there. That little hold on that green candle and coming back towards the 3, my rule of 3, right back to that resistance, and then breaking through that shows us right there the reversal action. This is what I mean by that reversal action, right? So you got a hammer. Now you're getting that bullish engulfing look where it's coming back towards the next resistance and actually breaking through that. And then what do you see? You see continued trend higher. And what are we seeing here? We're seeing 9 EMA trend holds on the 15. So that's the same thing that I'll just continue to look. As long as that 9 EMA can hold on this 15 minutes, I'm going to continue trying to ride that wave higher. We'll see if the bulls can take it back. All right, traders, like always, you're here on course TTP Live, guys. Smash the like. We got a lot more for you guys. We'll take a look at the Sunrise report. We'll talk about Tempest AI. We'll talk about different stocks that came in. Home Depot. Who's shopping at Home Depot? I know I've been shopping at Home Depot, so I don't know if I'm showing up in the next quarter of this one. But having to do a little bit of yard work. You know how that goes, guys. A little bit of some weed action, some insect killer. You guys know how it is. But definitely, we're going to spray this market down here. We'll get this market to continue driving back. It's like a cockroach. You can't kill this market, guys. It's going to keep coming back. We'll see what happens, guys. I know that the bulls got a little scared. And I'll tell you one thing. I know it's some bearish action when I'm getting some friends to message me that they're killing this market. Well, there it is, guys. You know how it is, man. They do love to do the shake or they do the bake. We'll see what happens here, guys. TQQQ. We could also take a look at SPXL today, which is the bullish of the S&P 500, and we'll see if that can continue higher. There's different plays out there that we can take a look at today. Let's take a look at what's going on in the chat. How we doing out there? And you guys tuning in right now, do me a favor. Smash the like. Let me know what stocks on your radar. We'll take a look at different stocks out there. We'll do a little bit of some ticker time. Michael Noss should be joining me in just about what? Got about 19 minutes for Michael Noss to come up in here. So, hey, we got a little bit of time here. Let's keep it going. Let's take a look at some different stocks. We'll get to the Sunrise report in just a minute or so, but I do see some stocks on the radar. I see some conversation in the chat. What's going on out there? Mitch, NVIDIA's earnings today or tomorrow? It's today after the bell. So it's after hours, right? So after the 4 o'clock bell rings, it'll be coming out, and then the earnings talk will happen overnight. So by the time you come tomorrow, it'll be a different NVIDIA, whether that's to the upside or the downside, right? And so continue to watch this. We'll see what happens here, guys. A lot of action coming in. A lot what we got to take a look at for today's going to be the day where the AI names at least continue to hold on to, right? Because here's the big question, right? And the big question is, if NVIDIA gets just destroyed, do the AI names get destroyed? I would say yes. But the other question is, can NVIDIA just hold on here, maybe make a little bit of a step up, and that step up actually drive the market back into the euphoria mode that we were in? I think we got to continue to watch that. Of course, we saw recently some euphoric names start to give up. And what were those names? Let's review them. That was like Palantir, right? Palantir coming all back now, guys. It's now down towards $90. It got above 100, right? I didn't even think it'd break that. That's where Kramer put it, right? 100. And now it's on the way back, and it could get back down towards this Bollinger Band, right? I mean, it could keep coming down towards maybe 75 right now, it seems like. We'll see what happens here, but it's not only this one, right? We also got HIMS that made a huge pullback. We'll talk a little bit more about HIMS coming up in the Sunrise Report, and we might as well just get towards the Sunrise Report and talk a little bit more about this chart, talk about the downside action that we're seeing. And this just goes to show us, right, when euphoria comes in and euphoria comes out. Everyone was yelling quantum, quantum, quantum. Well, now look at where QUBT is, right? Now look where QMCO is, right? This is why I talk about how stocks sometimes will not trade on fundamentals, right? They'll trade on story sometimes. They'll trade on technical analysis, right? They'll get a nice drive up with the market driving higher also. And the things that usually come in is that the uncertainty comes back into the market, which causes uncertainty to go from story focus to the fundamentals. And then you start hearing more conversations about P&E conversations, about things like this, because that's the truth. I think that this is where you kind of have to keep the focus on if you're trading these euphoria names, these names that like to go parabolic. And the way that you have to trade them is you have to understand at some point they're going to turn. And when's that turn come? When the uncertainty comes into play. What's going on to the Qs right now and the overall market? The uncertainty comes into play. So they go after those high flyers first. And doesn't mean that they're not going to go after everything. And that's why we got to continue to watch to see what happens in this consumer staples like XLP, right? XLP actually has been going higher and higher and higher. This tells us more and more defensive positioning, right? And maybe some value names that are going higher, right? Take a look at Procter & Gamble. Take a look at Coke. I think these are all names that are giving us signs of what we should be looking for, right? Pepsi. What's going on with Pepsi? Doesn't look too bad. It looks like it's setting up there. Celsius was a name recently that I even played on, I think it was on Friday or Thursday. I was able to make some good money in the pre-market on this. We'll see what happens Friday. We'll see if this can catch back, right? I mean, we're looking for value, right? I'm not necessarily saying Celsius, but I was just looking as we go through things. And you guys know it. We're going to go through sectors. We're going to go to finding out where we should be looking at. Let's get to the Sunrise Report so we can talk a little bit more about the action that's going on. Of course, the Sunrise Report, why stocks are moving, and which stocks are they, Mitch? Well, let's take a look at it and see today's Sunrise Report. All right, first up, guys, of course, Monday was rough for stocks as key tech giants weighed on the S&P 500 and the NASDAQ. Bitcoin dropping below 90,000, its lowest in 3 months, now trading 20%. Its all-time high set on Trump's inauguration day. And that just goes to show us, right? The growth and the kind of the focus names out there are just not getting the love right now. So we'll take a look at how this is affecting the market, but it's something to watch for, right? Investors want to believe the AI trade is over, but we think the boom has 2 or 4 more years to run. And this came from Doug Clinton of Deepwater Asset Management. So, of course, the analysts and the big money thinks that this still has some legs here. And retail is overreacting, believing that the AI trade is over. I don't think the AI trade is over. I just think you're seeing the euphoria come down. And what happens a lot of the times, this happens after the dash for trash, right? Where you're seeing trash names even get these huge moves. And why are they getting the move? Because the euphoria is running the market. And this is why, and I'm going to have to still talk about it with Michael Noss when he comes on here. This is why I still think that we're in bubble environment. And this is clear to me because of these volatility, these actions. And even with down action like we're seeing in the market, I still feel like we're still in that bubble environment. Overreactions on both sides, to the upside and downside, tells me the volatility is not going to end anytime soon, guys. So, hey, stay protected, traders. Trump's trade moves, of course, are focused here as the tariffs, guys, are going to be coming in. Canada and Mexico will resume after the 30-day kind of pause ends here. Of course, we got to talk about some key earnings. We'll watch to see what happens with NVIDIA after the bell. We get consumer confidence data at 10 a.m. So keep a watch on that consumer confidence data. I'll try to catch it at 10 a.m. I will tell you guys that we got to keep focused on that because that could change the market's move today. We could have down action, and then after 10 a.m., all of a sudden up action. We will see what happens here. But also the PCE inflation. The Fed's preferred inflation gauge is coming in on Friday. So the last thing on the economic data to really focus in will be on Friday, because if we see inflation spiking with this action, it's not going to be looking good. Maybe we can finally get the Fed to say that they'd cut. Find out, guys. Let's go to Home Depot now and talk a little bit about what's going on there, guys. And you guys in the chat, let me know. Have you gone to Home Depot lately? Let's take a look at the chart. Let's take a look at what happens in the earnings here and some of the conversation that was set. Let's go to the 15-minute chart here so you guys can see the pre-market action, and you guys are seeing a little lift there. Holding on here is Home Depot. Let's talk about the numbers. There came in here solid sales, but margins struggling here. The same store sales rose 0.8%, the first gain in 2+ years, beating the forecast of 1.7% decline. So, hey, you got the store sales to go up, beating an expected decline here. That's a pretty good beat there, right? Earnings per share barely beat the expectation by just 1 cent. They were expected at 301, came in at 302. So a decent beat there. It's nothing crazy. It's just a 1 cent beat, at least meeting the expectation though, right? The stock is down in the pre-market on the first action and then started to rise here. So I think you got to continue to watch this. I think that the real conversation is this is not a bad earnings report. It's just a bad day. So we'll see if this can actually lift with the market today. 2025 outlook, earnings per share expected to fall 3%, far below its 4.6% growth analysts projected. Dividend hike, a muted 2.2% increase, significantly less than the previous years. In 2024, we got an 8% increase in the dividend. In 2023, a 10%. 2022, a 15%. 2021, a 10%. Now only a 2.2% increase. This is where the concern is really coming in on the fundamentals. And why? Because this actually just affects more and more like those dividend chasers, right? Because a lot of people look to have at least some dividend plays to just continue to make money, right? Well, Home Depot is definitely one of those. Why? Because no one expects Home Depot to go out of business anytime soon. So it's definitely one stock that gets watched for, a little bit of some dividend. And then when it's on the up move, even more, right? But now let's see if it can hold on. You guys can see on the weekly trend, we keep coming back towards this trend line, and I could draw the trend line, but pretty much we've just undercut it here. So you can see from this November period, we're coming back right to that line, and we just undercut it. But that could be a recovery line. We've recovered it before, right? So there's no reason why this line can't get recovered, and it's just an undercut coming right back up. So we'll see what happens here on Home Depot. Can it hold that line and get right back to the upside? All right, let's get out of that conversation. Let's talk about the China chip crackdown, something definitely to watch for the market today. The market's riding high on China, right? I've even been a proponent of bullish China, right? Michael Noss cashing in here on those China names. And now we're looking to see what happens as this story develops, right? Because now Trump is getting stronger and stronger against China here. The Trump administration is preparing for tighter restriction on China's semiconductor industry. And this came from Bloomberg. So I definitely believe the rumors from Bloomberg. That's the number one place to believe those rumors. Wall Street Journal, another one, right? What's happening, though? White House is pushing Japan and Netherlands to join the crackdown, focused on limiting China's access to critical semiconductor tech. Expect increased pressures on chip stocks this week. And I'd watch more and more to see if this affects China stocks overall, because that's the one thing that could throw a wrench in this rally that's happening in China. Well, we'll see what happens if Trump can stop the rally there. Hims and hers, let's get to it. Let's talk about it. What's going on there, guys? This has been one of the strongest retail names and hasn't gotten the love that it should have gotten from the analyst. And now we'll see if they join in the party. It's been a quick down move as this has gone down now 45% in just what do we got there? It's 6.4 days. So 6 days, let's say. The earnings coming in here, not helping things, right? Plunging 18% despite strong growth. Let's take a look at the 15-minute chart. And you can see how it really took a beating there, guys, going from 55 now down towards those 40s, and really not much bounce back here. Let's talk about what happened here, right? The EPS here at 11 cents versus a 10 cent expected. So the EPS actually beat there. The revenue at 481 million versus the 470 million expected, which wasn't bad. Here's where the issues are and the issues lie in the company. It's weak margins, guys. Gross margins hit 77%, missing the 78.4% estimate. So margins are going down. Why are margins going down? I mean, I'm not looking into the earnings report right now that I speak. My guess would be advertising and trying to get towards, new customers, because that's where the ad spend could come, right? I'd be taking a look deeper into the earnings if I was a HIMS investor to take a look to see if that's the particular case here. FDA ruling on Ozempic alternative triggered last week's 26% sell-off, right? So that is another thing to take a look at here. FDA rulings, right? These types of things can affect your type of stock. If you're trading healthcare, you got to know exactly what to focus on. So what's next? The GLP weight loss revenue hit 225 million in 2024. The new focus on oral weight loss drugs and generic iraglutide. I'm going to try to say that, right? So pretty much a generic version of Ozempic, right? So that's what they're trying to get after. They're trying to get after those generics, try to offer the cheaper alternative. We've all heard how these companies have been charging thousands and thousands of dollars, and how some or majority of insurance companies are not covering these. So this is what's going on in the HIMS situation. 2025 weight loss revenue target at 725 million. Take a look. The investor earnings call was last night. If you guys missed that, I would definitely take a look into it. Let's go to Zoom here and Cleveland Cliffs' struggle. So Zoom Communication taking a big hit here as the revenue outlook disappointed. The full year revenue guidance coming in at 4.79 billion to 4.8 billion versus a 4.81 billion expected. So things continue to be tough there at Zoom, even though it started to come back. This just shows me more and more this company has a long way to turn things around. And in the long run, I think there's just so many competitors coming in here. And man, Google Meets, all the other alternatives, the free alternatives, they're going to get better and better. Can Zoom really keep up? I don't know, man. I think they're in for a long run. And the long run is on the downside. Cleveland Cliff, let's take a look here. Cleveland Cliff missed estimates here with 92 cents per shares percent coming in versus a negative 61 expected. You guys is a loss per share. So of course, under that, right? So not looking good at all. You're going further and further into the red. That's causing a big downside action here this morning on the first reaction. But look how it's coming back. This is interesting here because really the report's pretty atrocious here. 4.33 revenue at 4.43 billion expected. So also missing on revenue. The stock falling 2%, but coming right back here. The wick was down there at a 1040. It's back to 11. This is how sometimes it's not just the numbers that move earnings, guys. You have to focus in, guys. All right, DigitalOcean DOCN. This one not looking too bad. A nice little pop back here on this one, guys. Earnings coming in at 49 cents versus 34 cents expected. Revenues at 204.9 versus a 205 million expected. The 2025 outlook strong here. Revenue at 870 million to 890 million on the high end versus an 877.6 million expected. EPS at $1.85 to $1.95 versus $1.84 expected here. So big beat there. Not bad on the top end, right? That'd be about 11 cents higher. And Tempest, let's go to one more, of course, the Nancy Pelosi stock, and taking a little bit of a hit here. But it's a pullback. We'll see if some buyers can step back in. And this is how quickly trends can go, right? So this stair step, but look at the elevator moves down. This is why people sometimes focus on shorts. Tempest missing revenue here at 207 million versus a 203 million expected. So 200.7 versus 203, a little bit of a miss there, about 3 million. EPS here at negative 0.18, better than expected at least, but still not making money. And that's something to look out for. All right, of course, guys, will NVIDIA's earnings bring back the AI hype, or is the AI trade fading? All things to think about here. All right, guys, that's going to do it for our Sunrise Report. Of course, if you guys can catch this on our Discord every single morning, guys, I give you guys this, and it's my way of giving it back to you guys so that you guys can come in the morning and get it nice and simple, or just tune in here right on TTP Live and get it live, guys. So smash the like for that. If you guys enjoy me going through some morning news and getting you guys ready to lock and load here, guys. Right by 9 a.m., you guys already got some news. You got some trade ideas. And, of course, we're going to get to the trading action. My man Michael Noss is in the back. He's getting ready to go. We got about 2 minutes till we really kick this show off. But I do want to say, guys, I'm excited to keep things building here. And if you guys are tuning in, someone new out there, let me know. What do you guys want to see more on this show? We do some small caps. We do some big caps. We're always taking a look at the sectors in the industry, doing a little bit of some intermarket analysis, looking into what's strong, what's not, right? Relative is really important, guys. It's some things that I think are the most important focus. And whenever we go into these kind of downward cycles, right, I think it's so important to go into the sectors, because I talk about this with swing trading a lot, but also for the day trading. And this is why it's so important to know your sectors and when things are starting to rotate against you. Because when you can catch that, what can that do? That can do a lot of things, guys. That can really get you out of some swing trades and save the cash that you already made, right? One thing that I definitely learned in my swing trading was trying to react fast when I think rotation's going against me and just taking profits, because I've seen tons and tons of times where I have some good profits, market starts to rotate against me, and then what happens? I wait and wait for the stop out, and it comes, but I just gave up a good percentage there. So we'll see what happens here. And can we get the lift right back? You guys know it. You guys know it. You guys know how I feel, at least on the market. I'll tell you one thing. Let's kick the show off. Let's get some more perspective. We'll bring in Michael Noss. We'll see what he's looking at in the market. And the important part, I've taken a couple of days off. So I feel like I'm a little bit more bullish also, because I haven't taken that beating of the down action in the last 2 days. You guys out there, let me know. How has the trading been? Catching some comments in the chat. Good morning to you, Shane. Good morning, Cliff. Let's get after it today. Vic, what's up? What's up? We got some watch list out there. We'll be taking a look. Get that money, Steph, and let's kick things off. You guys know what time it is. Start that countdown. Let's go. Let's go. It's TTP Live. Wants 200, baby. You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at. What up out there, traders? How we doing? Let's get the show started. Let's bring on the man himself, Michael Noss. What's up? What's up? How we doing, Michael?
What's going on? You missed a Missed a heck of a day yesterday, man. Everything was fun.
This
It
is
was a
what
bit wild.
happens, Michael. This is what happens. The guy that likes to trade VIX
Yeah,
is not here when the VIX expands. You
of
know,
course.
that's just how it goes, my friend. It's almost like they knew. They're like, you know what, Mitch, go take a day off, man, because I'm gonna move this VIX really fast today.
Hmm.
And it was 2 days of a nice little VIX spike, man. And this
Yep.
is why I, I definitely, as a day trader, I think the VIX is something to have up your sleeve, man. It's definitely something that you can make you a lot of money on the right day, right?
Yeah.
And I think that that's the important thing, right? Also having the ability to hedge, right? Let's say if you do get caught on one side, right? And you're just kind of heavily caught on, let's say, for some reason I'm long something on the Qs at the high, or whatever, Microsoft, Apple, whichever the name be, right?
Mhm.
Things like this, right? I think it's also smart at certain moments when you're definitely seeing downside action to sometimes just hedge a little bit of your bet, right? Maybe grabbing a little bit of the VIX that day. Yes, you do get cut out of your Microsoft trade. But next thing you know, the VIX is jumping way higher than even you expected, and you're able to cover your losses and, if anything, get a little bit into the green.
Right.
And this is where I think it's important, even if it just takes back some of your red, right? Some of that big hit. This is where I think a lot of traders, especially day traders, find it hard to do this, right? Because they position either bullish or bearish. They
Mhm.
don't know how to do both, right? And I think that this is where the professionals really kind of make money, even on days where the market is down and they're a bullish leaning trader, right? We got to find ways to make money. We have to know how to play both sides. If anything, play both sides at the same time. Things like this are how you can start to expand. So I know there's traders out there that are suffering right now because they're long only traders.
Mhm.
And they're like, well, what the heck do I do on a day like yesterday, right? Well, tell me what's been going on, Michael, because I've been a little lost. I've been a little lost, right? I haven't seen the market action. You've been in it. What's going on here underneath the hood?
Yeah, well, it was a again really interesting day yesterday, and it was great for people who were hanging out in the room with us, because when me and Steve were chatting before the market opened, we kind of called exactly what was going to happen, which was
My boys.
we had this down move, a close at the lows. We're saying, okay, they're gap up in the morning, like they're at least going to try to take out those lows, right? Talked about how the market maker doesn't hunt individual stops, right? The market maker doesn't care about me or you, but
Or
you look at
me
a candle,
Disney, you know, but
you don't, you got this candle, right? You know, and gapping up the next day, you know, there's a lot of stops there, right? So they're going after a lot of stops. They're not going after individual stops. So we were saying they're at least going to try to sweep that liquidity, and they did. And by the time we left, it was actually up a little bit on the day. The market was going green. Everything was looking good. And then later in the day, things started to fall apart a little bit. So the close was very interesting to see. However, if you looked around the market, right, RSP, the average large cap stock, had a good day, closed green, right? When you look at some of these other names like the Dow, that closed green. So it was really one of those things. Large cap tech got smoked. The average stock out there in the market had a fine day. It wasn't a great day, but had a fine day. So I love those days as a swing trader and a longer term investor, because I can look at my portfolio and I can say, okay, most of the markets were green. Only the SPY and the Qs were red. So let me take a look and say, what got killed with the market? Maybe that's something I want to remove from my portfolio. What held on really, really strongly? Maybe that's something I want to add to, that kind of thing, because you did have this two-sided market. And it's what's very important about watching this in real time is if you went on the news and watched the news later, say, oh, what an awful market day. Well, again, unless you were the average large cap stock or anything inside the Dow, you did great. And the Dow was actually held up a lot by XLV, and this is something we've been talking a lot about. This healthcare was actually up on the day, really, really strong. And I'm long a bunch of healthcare names, and it was because on this candle right here that we actually closed green on the day. This was when UNH was going to get investigated by the DOJ, gap down, closed, not, entirely didn't break the prior's high, but closed really well, and then had a great day the following day as well. So it was really interesting to see. the back and forth part of the market, the fact that everybody on Twitter and out there on the streets was having a hard time. But you look at it and you say, well, the average stock was up. Well, what's your problem? Well, why is everyone afraid? And then even when it comes to the SPY, as much as people are losing their mind and freaking out, we are pretty much exactly 3%, 2.5% down from all-time highs. We are 2.5% off of all-time highs, and you're seeing a lot of the perma bears come out as well. So to me, this is starting to feel like everything else that's happened so far this year, where we have a little bit of a down move. All the perma bears get super excited and they say, oh, good, I'm finally right. And then we rip it. And if you look at the S&P 500 here, this is including today's candle, including pre-market section on this, we were down quite a bit so far this morning, and it looks like we're recovering and potentially going green. So a little bit of a hammer candle showing that there's some buying coming in. Market opens at 23 minutes. We can kind of see what happens there. But yeah, nothing really, it wasn't a shock event to me. It was kind of just a normal digestion style day that I want to take a look at a little bit longer. But yeah, me and Steve had definitely a good day trading. It was a good day to be short and out very quick because you had to make your money and move on. And then, watching some of the action and trying to kind of pick our spots.
I'm looking around, man, and I think it's so important to do that, right? And especially in a time like this, right? And that's as I look around, I see more and more like healthcare just continuing to hang on, right? That was one area that I was bullish before all this happened, right? And I take a look at that and I see the RSI leaders, right? I'm looking at like where the strength is, right? And if I could stay with those names, I see Eli Lilly up there, right? I'm looking in the healthcare sector, right? AbbVie, Johnson & Johnson, Gilead, and there's some strong looking charts on there. And of course, we just talked about with hims and hers, how there was that FDA kind of reversal and it kind of helped, of course, Eli Lilly. And you can see the chart off of that. I think you continue to watch this space, right? Like you and I talked about it, how the whole situation with, RFJ and all that situation, all the worry, all the uncertainty had gone to the sideline now. And now it's just, okay, yeah, there's going to be some regulatory changes, but we all know how these companies work. They got tons and tons of lawyers and things like that to worry about that, right? So I don't think it's a worry at the point right now. And I think you're starting to see that gap being filled, right? I mean, look at that chart, right? I mean, you got it right there. Looks to me like it wants that gap filled. And if it could fill that gap, I mean, it's right
very
back
close
up near the highs. I mean,
that's all-time highs there.
Not a bad looking chart. Here's the one in the dirts, because you guys know how I take a look at both, right? As I start to see leaders go, I look for the leader laggard trade, right? So maybe there's a laggard that I've missed that I can go and look for some strength to come into. So I look at normally stocks that are in like, let's say 40 to 60 RSI versus like at 70 to 90, right? Those are a little bit higher. So I'm looking at a little bit more, maybe something that just starting to get the wheels pumping. And that's Pfizer. Take a look at that one today. Yeah. So I'm starting to see this. And I've tried my best, man, to call Pfizer plenty of times. So I'm not saying that this is the complete bottom turd, because every time I've said that one, it hasn't worked out, right? But it's a big level here. And it's a quick reversal, which I like to see, right? I like to see them, the ugliest looking charts, show me a quick reversal out of it. So what are you doing? You're squeezing those bears, squeezing them. Eventually, they have to give.
Yeah, if it's one of those things that if the sector, because sector, it's been studied and it makes up, I think it's up to 70% of the performance of most stocks, right? Basically, if your sector is tanking, you could be the best stock in the world. You're probably moving down to some respects with it. So to make sure that it's one of those ideas in which that you're able to, right, have the sector and your stock move together, that's why we spend a lot of time focusing on the sector. So if the sector on something like Pfizer starts moving, that just makes this support zone way more likely to actually hold, as opposed to, if the sector is falling apart, that's not something that you're super interested in. So there's kind of two schools of thoughts, and different people approach this differently. Some, you just buy the leader, right? You sort whatever the strongest name in the sector is, and you say, I'm going to buy that because if it's the leader, it's probably the leader for a reason. There's probably a bunch of nerds that actually look at the finances behind it, and they look at, right? All the fundamental stuff I know nothing about. And they say, okay, this is the name we're going to put our money into, so we should go with the leader. And then some do the other way around, where they look at areas that are at support and they look for a catch-up trade. What I'll say is probably going after the leader probably has the best kind of win rate behind it. And then going after one with support like this is probably going to be good for risk reward. So, if we have something like this, if you're just risking against this support, and even if it just pops up a little bit into this downtrend, it's 2.5. So your risk, that's a nice little trade for a long-term type of trade where you're just playing the support. If it ever got back anywhere near highs, you're talking 5-10 times your risk. And that's the kind of trade that you almost have to take mathematically, just because you don't have to be right very often to make it so that 5 times your risk ends up making you money in the long run. So that's going to go Tesla. Let's take a look. I don't think it's doing anything.
Let's take a look. Tesla.
Yeah, it's still not doing anything.
Yeah, it's just hanging out a little bit there.
Yeah. So this is going to depend a lot on the market, right? The market is Tesla's such a large market component. It's not going to be up a huge amount, and on a market down day, it's not going to be down a huge amount. Especially, and this is something that's really important that I think we talk about, is that correlations between different stocks and the market, they vary. In times of uncertainty, or essentially the higher the VIX goes, the more stocks get correlated to the market. You can, again, this is something that's very easy to study. You can take a look at, basically meaning if the market's just grinding higher day after day, and it's a quote unquote normal market that has a low VIX and no one really cares about, you can have correlations break, where you have some sectors go up, some sectors go down, all that kind of stuff. If you have big sharp down days and big sharp moves, the whole market will move with that. Again, the correlations will increase. So we're in one of those environments that I think for the next couple of days, Tesla, Nvidia, all these things, they only care about what the market's doing, and vice versa, right? The market's only going to care about what's happening with Nvidia earnings. I don't think, like I was looking at the economic calendar here, there's not a lot today, right? We've got consumer confidence.
Yeah, that's the only thing really, at least for today. Consumer confidence, 10 a.m. We'll see if we get a little reversal. My biggest thing is not that I think the number's important. They could just use it, right? They could just use that time, that kind of like, oh, we'll wait for that time to put in some big order. So look out for it.
Yeah, some Fed jerks.
Yeah, you know it.
Barking.
Talk. barking, you know?
Yeah. Barking's barking. So yeah, other than that, I think more important than any economic number is we have Nvidia earnings tomorrow night. And I think that's more important than anything. I was talking about this with Steve yesterday. I don't think Nvidia has to blow earnings out of the water or anything like that. I look at Nvidia earnings like a ticking time bomb, and the market just waits for it to pass. So if Nvidia comes out and says, yeah, they're not spending nearly as much on AI as we thought, then the whole market's going to have a collapse day. I think all that has to happen is Nvidia has to come out and say, yep, everything's still going as we expected it. Everything that, the math is still mathing the way we want it to. Everyone's ordering in the way that we want, and then the market can take a big sigh of relief and then focus on the next thing. But
it's the Blackwell chip. That chip specifically, right? Yeah. That's the one that everybody's focused on, right? I think that you'll hear about cloud and things like that, but I think, and you'll hear also about their new GPUs that came out, right? I mean, I have the 1 year back, but they come out every year, man. So it's how it is, right? So you'll hear numbers about that, but the focus is just the Blackwell chip, right? Yeah. And the demand, and is it continuing? Do they see slowdown there? And I think that they can still they can still do it. Like, I think that even sometimes has a tendency of, and I know this tendency of leaning towards the bear side, right? The bearish and gets out on me when I see over evaluations and things like that. But that tells me to get tamed also, because there's a reason why everyone loved it, right? The numbers were there last year. Yep. They can just keep the bar just there. I don't think they need to I don't expect like a complete over move, right? A complete beat out of the air. But if they can just hang in there, hanging in there can be what can hold the market here and then get us to go back and continue, right? Right. And that's what I'm looking. That's what I'm looking for.
Yeah, I don't think it needs to be they've done a very good job of forecasting, right?
Mhm.
What's going to happen. I just think the only thing that people are scared of is, if they come on and they say, oh, it's less than we forecast, right? That downward guidance is really what's going to worry. If it's on par or slightly increased, I think both of those things are bullish. I think just the market is worried about, okay, what happens if, especially as vulnerable as the market is here, what happens if Nvidia comes out and says, oh yeah, they're not spending as much as we thought.
Yeah, we got a great comment in the chat. Steph coming in here and asking about guests and things like this. I think this is so important, guys. At the end of the day, don't forget, and I say this all the time, you guys run the show also. I know that, you guys see us run the show. I mean, but at the end of the day, you guys run it. You guys can also give us the feedback that what you guys want to see more of, right? So it looks like some trading psychology trying to be focused. And trust me, I'm the biggest proponent of this, right? I love trading psychology and trading psychology books and different ways to kind of develop it. So I'll go ahead and I'll go looking for all the trading psychology guys that I know. I know 2 or 3 that actually just kind of have like more of a service where they do trading psychology, but I also know one that has a really, really good book. So I'm not going to give the secret out because I just want to confirm them, but I got you. I definitely will reach out, and I know someone that's really, really good. And another thing to think about, and this is what I'll kick it to you guys. I've been thinking about this more and more in trading psychology. I've been starting to study some of the best poker players, and there's a reason why. I'm starting to try to take more of a understanding of how to big bet, because as I get more and more into my trading, what I realize I struggle with more is not necessarily taking small bets. I think I can do that and I can be consistent then. But when I start to size up and want to take bigger swings, how can I hold that and handle the emotions that are needed, right? So that's another thing that I tell you guys to take a look at. It's not just only trading psychology that you need to look at. It could also be improving yourself, your own mentality, things like that. Like maybe Atomic Habits, reading a good book on habits and things like this. All different types of ways that you can start affecting your psychology and it actually lead in to your trading, right?
Yeah,
all right.
It's the most important thing, right? There's nothing else to it. Even if you've got the best system in the world, if you're not able to follow it, it doesn't matter, right? So it's just making sure
100%.
that you're able to do. And I like the poker player idea too, because it's one of those where they're dealing with the same kind of thing we are, which is a probabilistic outcome that they can never know, right? And that's, you could play a hand absolutely perfectly and it not work out. It's just the way it is. And same with trading. It doesn't matter if you do the analysis absolutely perfectly. There's, a 40%, 50% chance you're wrong. So just understanding that and understanding that the most important thing out there is that psychology factor, even for people like me who are trying to be completely systematic. It's still very important, right? It's just different psychology that I have to look out for, not getting in the way of the system, the main thing. So
and I think that's an important thing too. And just finding ways, right? I think it's always about looking at your strengths, looking at your weaknesses. Can I adjust something to help my weakness, right? To kind of turn that a little bit. And can I fortify some strengths that I have, right? And those types of things are what you're trying to work on, right? The things in between, let them be in between, right? There's a reason why they're in between. Work on those weaknesses, work on fortifying your strengths. And I think that itself can help you, right? For a long time, I was working right here on the stream with you guys about kind of going into a sizing approach, right? And I think that that's another thing that I'm going to keep working on, right? And that's the hardest part, I think, of getting towards the bigger buying power. It's not necessarily about taking the trades. Taking the trades is the easy part, I think. It's the how do I size in? How do I size out? When do I take the gains, right? Is it an all-out situation? Is it a partial situation? My biggest thing with partials, and I feel like it's a conversation that Michael and I can maybe expand one day, is on partials. The problem with me is that a lot of times when I look back and I take a lot of partials, is that my risk and return starts falling off. My overall risk and return starts falling off. And that's where it gets hard, right? Because if your stats fall off, that's where I get frustrated, because there's something that I'm one of those traders that have some subjectiveness to my trading. but I want my statistics to be fully objective.
Yeah.
And there's a reason why, right? Because I can have some subjective in what do I want to trade and what strategy I want to get into that day, but I don't want to be falling off on my probability to success.
Mm-hmm. Yeah, the problem with partials, right? And I actually did a whole podcast on this with my co-host on systematic trading.
What? We're gonna have to look this up because I haven't seen this one, Michael. So you're gonna have to find me a link. But
I'll get you a link. But yeah, Line Your Own Pockets is the name of the podcast. You want to check it out? It's just me and another systematic trader, just talking about the whole quantitative side. And the issue becomes it's generally what we decided on, talking back and forth, is it's generally never the right idea to do a partial kind of in or a partial out. Purely mathematically and systematically, right? It's not.
Yeah.
The benefit that people gain from doing this partial in, partial out, and the partial profits is all your own kind of mentality. It's fear reduction. And essentially you're saying, okay, I'm in this position, I am afraid, in which I am going to give back some of my profits, right? Or if I lock in a little bit here, at least I've paid myself. The whole I'm going to lock in my profits and move stop to break even is one of those things that's just kind of said over and over and over again. But if you look at the actual kind of math behind it, it's rarely the right answer. Now, that's not to say don't do it. That's saying that you understand that kind of mathematically it's just not the right move. But there's a lot of things that we do that mathematically, I think I made this example in the podcast itself too, which was basically saying, if I gave you the most optimal meal prep to lose weight and to get super jacked, if you're not going to do it, it doesn't matter. It doesn't matter that I gave you the optimal thing. So the optimal thing is, you take your trade. When you take your trade, you have some sort of trailing stop or profit target. You do nothing until that's hit, and then you get out. That's generally mathematically going to be the thing that yields you the most amount of money in the long run. But again, with the diet example, it doesn't matter if you can't do it. If you can't bring yourself to hold till maybe your profit target's at $10, and the thing gets all the way to $9.99, and then comes all the way down to your stop loss, and you end up losing on the trade. You did the right thing, but in the moment it feels really, really bad. So it's managing that the balance of what is mathematically correct, and then what is able to be done. Because as you're right, what happens is by taking profits early on the way up, you're reducing your overall potential return, right? Just by taking them as they come up, and you're actually increasing your risk a little bit, because when you move your stop to break even, say you were risking $100 to make $200, but then you take a little bit of a profit on the way up and you move your stop to break even, you only made $25. Then you look, and if you didn't move anything, you would have made that $200. You've completely skewed your risk reward now, where your average gainer is going to be dropped significantly because you just took that little $25 hit. So again, it's this optimal versus what you can kind of stomach and what you can manage.
Yeah, and I think that's important. And I think, like I tell you guys, it's so understanding what you're intending to do and what actually comes from the results, right? I think this is so important. And the only way you do this, gotta look at your data, right? Yeah. If you're not looking at it, you ain't even gonna know it's happening underneath your feet, right? So great conversations that we can also expand on. And you guys out there, if you guys have topics like this that you want expanded on, well, just let us know, because that's what we're here for also. And I think that so many times traders get into a conflict of how I should at least look at something. One thing's for certain, I'm sure Michael and I have thought about it. So if it's in trading, we've taken a look or thought about it. So might as well bring it up here. And Michael loves to kind of go through all the studies and all that, guys. So he's gonna know a lot of these things in a way that you might have not think about it before. You might have not even known that there's a actual historian type of look that you can go find somebody that already did this research, right? That already looked into it. That's how a lot of finance goes. So hey, feel free to bring in those comments, guys.
And it's good too, because there may be disagreements on some of these topics, which I think is great. It's one of those where there's always different approaches. There's always different ways to look at it. I did post a link there in chat. if anyone's interested.
Yeah, let's go. Check those out for
Sure.
sure, guys. And if not, just do like I do, right? Whenever I get these links like this that I want to actually watch, I'm not going to watch it right now, but what I'll do is I click it and hit the save for later.
Yes.
And then YouTube, as soon as you open it up later, guess what? It's going to put it right at the top for you. It's going to be like, yo, go watch it now. So
I just
what I
recently discovered that. I was the guy who'd always just open it in another tab and then just have like 1,000 like 20 videos.
And
that
30
I
videos
saved.
playing in your ear. Yeah.
Yeah, you open up the browser
just
one
save
day
it
and
for
it goes
later.
crazy.
It will tell you, trust me. The algo will be like, okay, you want to see this later?
Yeah.
I'll bring it back when you're ready.
Absolutely. All right, let's take another. I just have TMC up here.
Let's do it. TMC being asked in the chat, and I'll let you kind of lead towards the bell here. Anything also that you're looking out in the market? As I tell you guys, I gave some look, but for me, it's watching the open.
I'm with you there. So TMC again, this is someone was looking at one of these D-SPAC again. Anytime you see this nonsense around $10. You know it was a SPAC, and it did what most SPACs did, which just completely tanked.
Hey. Some of them are doing well. I'm a SPAC defender.
DraftKings, I can think of like one or two that are actually doing okay.
Hey. I'll bring the list for you. The list for you.
If you
There's
find
a lot
more
of
than
ugly
five,
losers,
I'll be impressed. If you find more than of the hundreds that went out. So just chopping sideways, I would say, right? Just watch. It has this history of when it does this run-ups, it gets sold into. So unless this time is different and you've studied whatever's causing the move this time, this seems like a very just fundamental type play, not something that's super technical, because it pops and then it sells and it pops and then it sells kind of over and over again. But double top here at around $3. If it ever gets through there, maybe it's going to slowly grind to highs, but again, it's not something I'm really super interested in. When it's one of these things that I'm 100% with you. I think we have to watch the market. I'm not super keen to take too many trades right off the open here. If we go into the SPY and let's just look at the pre-market area, and you can see there's just kind of a mess, right? And we'll do like we always do, right? We'll mark the pre-market highs and then we'll mark the pre-market lows and kind of look to see where we are in that range. But again, we were really bad off the open, and then we kind of went green again. We went bad. I wouldn't be surprised after two pretty sizable down days if we just don't see some digestion here, where both sides feel that it's hard to commit, I think. But if you look, it's one of those where the Dow again is up on the day. The Dow is holding strong. So depending on where you look, this is either a really ugly market or it had one down day and now it's just digesting it, right? So if we look at the Dow, you can see the Dow is just moving sideways. So I think if you're looking on the long side, you got to focus on things that are a little bit more safe-ish, I guess, or boomer, things that are not high-tech stocks, things that are not anything that's super interesting. It's more about healthcare. It's more about real estate, some retail, maybe. All of that will happen. And retail obviously will be in play a little bit later when we have consumer confidence that comes up in just a little bit. In 30 minutes from now, we have consumer confidence. So I'm doing the same as I always do as I test this day trading strategy. I've got names like DocN that are gapping up on the day. It was very hard, obviously, to find stocks that were gapped up quite a bit. But some of the Chinese names are gapping up as China continues to be an absolute rocket ship. So I'm paying attention to a lot of these names that are gapping up just to see if we can get a move, or I'll look for a little quick scalp on the Qs if we get that. But we have just opened. The first initial tick here is
let's go, guys. Anyway. Let's do it. So I'm looking at ADIL, at least in my small account here, guys.
ADIL.
Just went back above $1. I'm looking for a 94.90 washout to 89 cents. Then back through one is what I'm looking for here. I'll show you guys it on the chart. And another thing that I want to tell you guys more about, I'm going to start doing more of these queries using X's trend model. I don't know if you guys have taken a look into this, guys. You got to be having the full features, but this is actually pretty interesting. It's called Radar. I'll tell you guys more about it as I keep developing things. Also, LI Auto on the radar today, guys. Looking for that stock to make the move. I already mentioned that one, but I didn't know it had a new SUV coming out, guys. So that's why that one's making a big lift today. We'll see what happens out there. We'll take a look and see what stocks are moving. ADIL on the radar here. We'll see if we get that pullback. I'll show you why I'm looking at the pullback there towards the 86. So right around here, this kind of resistance from the pre-market action, I'm looking for it to come right back into that 90 MA, 86 area. So 88 to 86, and then back through one. See what happens.
Just sending out 20 orders here for the systems that I'm testing before I go over to the more discretionary side of things. So there's my 20 orders out. That's just how it works. DocuSign is starting to potentially break down on, not DocuSign, DigitalOcean Holdings. Got a little confused there, but
yeah, that one's not bad. Yeah, I looked at that one this morning. That's DocN, right?
DocN, yeah. So looking at the strategy, it did trigger in here to the short side, but I'm just gonna watch for just a couple seconds, just because that's the idea behind it. Is, again, we're looking to short a break of VWAP 1 all the way to VWAP 2. This one has a $3 stop, and it's pretty wild. So we got to be a little bit worried about that. Just the incredibly volatile action. It might not be one that's actually good to trade at all. So I'm going to keep an eye on that a little bit. Some positive news, positive earnings, I guess, is what was happening there. Just to see if it gets a little bit of a pop. So if I trade this, it's going to be incredibly small, just because it is so crazy.
XLF
wild.
Ripping, guys. XLF is where I'm seeing some real nice strength out the gates here. I'm looking at that as a pretty strong move there. Of course, was on the playbook today. We'll see if some financials can kind of lead here.
Yeah, XLF actually held up great yesterday.
Healthcare also.
XLF day.
I'll play some Pfizer here.
Yeah, so it's actually up, and it's near the high of yesterday and the day before. So XLF looking really strong here. Just going to keep an eye on the S&P 500. Of course, green for now. So the question is, does this hold? We have the pre-market high and pre-market low marked, and looking to see. I have the 2-day VWAP here because I think that's really important. Then I also have the VWAP from right before this really kind of negative day that happened. And that's sitting at 600 and 601 for the like. So the idea is hopefully that we get, some sort of a pop in, and then we see what happens at these zones. Because this is the average market participant from yesterday's, and then the average market participant from the day before. Also, PayPal just triggered short into the system, where, again, PYPL, a nice little gap up today. One of the only things that was gapping up today. And breaking down under that VWAP on the open. So that's, again, another thing to keep an eye on to see if that ends up breaking down. It's about $1 risk on that. So that's actually better than that DOCN, which is a bit of a wild child. So I'm just going to watch this. Again, I got my eyes on the SPY as well, because I want to see the SPY hold in some way in order to make sure. Move this over here. And just to see if we're able to break out, or if we're going to fail entirely there.
Keeping an eye on Pfizer and TQQQ for the main eValve account. Those are ones that I'm looking for. At least TQQQ is all about the 30-minute pullback or 1 hour pullback, looking for support to come into play, but that's closer towards 79.40s. So that still would need more pullback there. Continuing to watch ADIL, that's holding $1 pretty well there above $1, but I think at this point, I got to continue with the plan. I need that fake out washout, and I haven't gotten that look yet. So I'll look for the washout, the dump, and then I'll get in, right? We've talked about this countless times with these penny names. It starts looking really good, and then you get dumped. That's when I want to come in on ADIL. Bristol Myers, another one to keep an eye out on the upside. Eli Lilly, another one. Keeping an eye on this ADIL in the small game. There's the cues on the downside. That can be maybe a move there. What you got, my friend?
I did short that PayPal. Again, according to the system. See the blue arrow right there? That means short. I've got a profit target out that would hit my $100 target for the day, just a little bit below. So there we go. Perfect. So there, done. Perfect. Done.
Cashed it.
Done and dusted. So again, the idea here is pretty simple, where we're looking for a stock to be above VWAP and to hold VWAP for a period of time on a gap up. And we just essentially want a breakdown, because we know a lot of stops and top profit targets will happen around VWAP. So we're just basically playing the breakdown and a potential flush. QCOM, was QCOM yesterday? Or
nice
CS,
reversal off the
CL?
80s for TQQQ.
Yeah, QCOM. So this was the trade I took here in QCOM yesterday, was the same idea. I think it was QCOM. Yeah, so it was above VWAP and then flush below and took a little bit of a flush there. So the reason I'm stopping, just to reiterate, just like we talked about before, it's not optimal. I should take every setup that meets the criteria, the same size and the same way and all of that. But what happened was, in the number of accounts that I blew up, what I've noticed is that quite often I was up good on the day and then continued to trade, took a loss, a little bit tilt, took another loss, and ended the day flat to down. So if I went through and I did all my statistics and said, hey, if I had just stopped at a profit target, then it would have been enough to kind of get me to that zone. So that's what I'm doing personally. I know it's not optimal, but I'm setting a profit target for myself for the day. And when I hit that, I am just done trading intraday anyway. And then just going to adjust that target up over time as I get a little bit of room on the eval account. So the SPY is just chopping here. It's interesting to see, you mentioned the Qs.
Yeah.
The Qs looking very much weaker than the S&P 500, just showing that this is one of those big cap having a big cap tech having a very hard time, and everything else doing pretty okay. So makes you wonder.
Long here on the TQQQ.
Right. So pop that in. Oh,
I got you guys. I'll put that chart up there to TQQQ. Yeah. I got here 79.93s long here, but it is just cut me out on that pullback there. So I set a stop there on the low off the 70s there. So it just got cut out there. Really quick trade there, down about $70. But now I'm looking at the 30-minute mark, which is a little bit further down, which is down towards the 79.30s. I'll try to scoop it down there. I tried to play the 15-minute, which was the $80 reversal on TQQ. Now it's coming down there towards this support. That's where I'm going to look for the bigger type of sweep area, right? So the key, though, also is to look for the undercut, right? So it needs to kind of wash through there as it comes back, then trying to get into it. That's the harder part of this trade. You got to be patient. And sometimes it will take till 10 a.m., right? We'll see what happens.
Yeah, so what's interesting, so everyone just kind of pay attention to this, not the chart, but this is just the top. These are all the ETFs I go through every day. It's pretty wild. But what I want to just focus on is these ones right at the top here. And it's because these are the major indexes. So I have the Dow, the mid-cap, SPY, Russell 3000, all of this. And you notice every sector is up except the Qs, or every major index is up. Small caps are up, micro caps are up. IWV is the Russell 3000, which is like 98% of investable asset. That's up. Everything here is up. The Qs is down. So you can quickly look at that and get a theme for the day and say, big cap tech having a hard time. Everything else so far is doing A-okay. So we need to really make sure that we're focusing. If we want to catch up trade, then we look for some tech to buy. If we want to look at the relative strength, we got to look boring. So when we're boring, right, Mitch already mentioned XLF. I like the look of the banks. A swing trade that I took yesterday, I haven't checked on yet, was Jeffries, of all things. Last time I heard that name was ages ago, and that held on very well. So start to think, if you want to be to the long side, start to think boring. If you want to be to the short side, then maybe start looking at some of these tech names.
XLV kind of holding on the pullback there. NVIDIA still not going back towards the green. Keeping an eye on that one. TQQQ coming right back down, 79.70s. We'll see if it goes to the 79.30s there. Looking around out there, guys. Small caps moving fast. FTMO, BREA. ADIL. Some of the names that are really kind of moving this JTAI, Jet AI, really making a nice leap from 630s to $8.
I think this is a good comment to talk about as well, right? Stopped out of my Microsoft, shake my head. No, right? You will be wrong on half of every trade, half of every one of your trades you make, probably for the rest of your life. It's just going to happen roughly half the time, right? If you're really, really good, you get to like a 66% win rate, right? It's great. So don't look at it like that. Look at it as you took a trade, and if you followed your rules perfectly and the risk was acceptable, it was a good trade, right? Shake it off, take a walk, kick some rocks, do whatever you need to do. For me, I go to the gym every morning, angry music, lift some heavy things, and then get right back to it. If it was an acceptable trade, makes sense. The market's down. Microsoft's a big market component, so we need to see what's happening there. We have the Qs, again, just flirting around VWAP. DOCN is triggering here as well. This is a setup in theory I should be taking, but again, I need to follow this this rule set that says cover your position, walk away. This would be one of those that down the road, right, as things go and as I stop blowing up accounts left, right, and center, then I will extend out the amount of money that I'm looking to make and probably split it up over 2 or 3 trades and then go from there. But this is triggering from the setup. PayPal out way too early, but that was what I was looking for. That was the rules. So that's the trade that I took.
I just missed a big runner there, guys, on WAFU. But it was a China name that I never even heard of, man. So it was so hard for me to pull the trigger. I froze there at the 390s. Wow. I was watching it at 390s, right on the 9 EMA there, and it just looked good. It looked great there. My biggest thing is I never even heard of this name. And majority of the small caps, I've already kind of registered them in my brain, right? Like, and this was one that I was like, woo, educate. I did not know what the heck it was. So big rip there.
I think that's probably also a good thing, right? You don't want to be taking trades on things that you don't have an understanding of. But that chart, especially on like the 30-minute there, looks pretty great. A nice consolidation between 4 and 3, all pre-market and post-market. Nice clean break of that. Probably going to be one of those that's you're going to see halt multiple times throughout the day. SPY is not looking great though. SPY is looking like it's rolling over a little bit here. If we take a look at a shorter term chart, tried to break highs, couldn't do it, failed there. It's not something that I'm super interested in kind of getting involved to the long side. Again, the options that I see are continued downside just because we weren't able to close positive, or just sideways chop. That's why I'm this range from the pre-market low to the pre-market high. It's already a pretty wide, pretty expansive type range. So it's I could see us just hanging out in here. And the reason for it is you quite often see this after massive moves in the market, is just a lot of indecision where people to the long side and people to the short side, no one's really long super interested in stepping in just yet. And then people from the short side are looking at this saying, well, this is really overdone to the downside. I'm not interested in shorting here. So you get this kind of stalemate of everyone just waiting for whatever that next move is. And that creates this chop. But we are getting very, very close to the lows from the open. And then we'll see if we go down. It's 595-ish is the pre-market lows, and we'll see what happens if and when we get there. I'm with you, Mitch. I think maybe get down to 595, do a little flush through, get everyone all super bearish, and then see what happens a little bit later.
Just hit that 79.40, man. It got me a little interested there on the TQQQs. I'm looking for the undercut though. Can you make an attempt to 79.20s on the TQQQ? But we just hit the 79.40 area that I don't see it as a bad thing. I'm also looking at just the Qs overall, right? I'm seeing around that as being around kind of like the 517.20s. Can we make a move to the 516.70s though? So can we make the move to maybe 517 on the Qs and then come back? That's what I'm kind of looking at, guys.
So we do this pre-market range on the Qs, same thing. You can see much further down in the range on the Qs than we are on the S&P 500. Again, just showing that if we look over at this side here, right, the reason I'm keeping this panel open for you guys is just to show Dow is up, mid caps are up, small caps are up, micro caps are up, and then we have, I can actually just sort it here to make it easier. Then we have the Qs and the SPYs are lower. And that's, again, just saying that anything with a big tech weighting is having a bad time. We can go to the heat map here. Let's actually do the change today. You can see a lot of red in technology, a lot of red in Tesla, Nvidia, a lot of red in this sector. But then look at these other sectors, right? Healthcare, retail, consumer discretionary, consumer or non-durables, used to be staples in my day, and finance. If you look at the finance sector here, you have coin and hood down, and then you have Burke B up, which is going to be, right, this is your exciting finance, and then this is your boomer finance. So boomer finance doing great, everything else doing bad. Qs are pushing down again, potentially taking out or getting to those lows. So that's very interesting to that side of things. So yeah, see what happens if we do get that undercut and rally. The SPY looking a little bit weak as well. So overall, one of those just kind of hands off type of days. Let's see what happens. You know, if I'm going to take a trade now, it's probably just going to be on the overall indexes, and then it will be in a personal account, just because I'm following these rules in the eval.
All right, guys, starter TQQ. I want 100 shares of what I expect to be close to 1,000 shares. So a tenth of what I expect on the position right now. Just to get started here. And where if I can even get some move to 79, I don't need to stop out here. But I'm going to look for it to come back through 79.20s on the TQQQ and get back to a green candle on the 15-minute. The open of that candle is 79.46. Back through 79.50s will be the indicator to go full sized in. So giving you guys a perspective on how I'm expecting to size into the position, right? It's not going to be maybe 100% to that, but that's the way I'm looking at it. Looking at what stocks are also staying strong in this pullback, right? Well, you're seeing what XLF right on the pullback, XLV going right back to highs. So Pfizer even looking good there, and a lot of different names in healthcare. That's where I would stick to. That's been a good sector right now if you're a long only style trader, right? I'm seeing some financials pulling back there. Nvidia still can't catch some buying. That's a sign. That's a weak sign for me. I need to see some strength coming in there. But let's see what happens here. It did get the move down there towards the 79.07 here. It did not break, coming back to the 79.20s. That's my sign to go ahead and add here. I'm going to get an ad here. Now I got an ad. Now I got 600. Now the move back is 79.40 for the remaining 400 shares.
Oh, I just went to your screen for a second. It's been Zynga there.
Sorry, man. I have so many screens. This is where the new setup thing kind of messes with me, guys. So yeah, I got it. I have a new setup there. I kind of moved my desk around. You guys see me centered here. It's just part of the game, right? So one of the things that I'm working on is getting a new camera so that I can have 2 cameras set up. Ooh, then we're looking good, guys.
That's good. Yeah, but one thing I'm highlighting here is LI. So Li Auto, you talked about it a little bit earlier. Click back there again. Talk about relative strength. It is not. I looked at BABA, I looked at FXI, and Li Auto is not only strong relative to the overall market, it is strong relative to China in general. So this is one that might be interesting to watch potentially from the long side. Pre-market high is, say, I don't know, you could do probably 25, so 30.25 as a little bit of a way to take that trade, just because we talked about this in the morning. Relative strength is huge. So if we've got the SPY selling off, we've even got FXI down here selling a little bit as well, like, you know, up on the day but selling a little bit, then it makes perfect sense that we want to look for relative strength, not only inside of the overall market, but inside of China in general. And this Li Auto had news this morning, a nice little gap up, and is looking like it might be breaking out to new highs here. So this is a very interesting watch on something that's doing pretty well here comparatively to what we're seeing. SPY continuing to kind of flounder around, slowly making its way, still well above pre-market lows. The relative strength on the S&P 500 versus the rest of the market is pretty interesting, right? So the Qs are down almost 1%. The SPY is only down 0.25%. IWM, Dow, mid caps, all up. So large cap tech continues to be the culprit here, pulling us all down with it. How poetic would it be if, right, all this week up until Nvidia earnings, large cap tech just pulls us down, and then we have large cap earnings and everything just rockets because of Nvidia.
Man. All right, getting some pressure, guys, on my TQQQ here at the 78.80s here. This is where I'm looking to see if we undercut and rally. If not, I need to get out here.
Yeah, SPY getting close to that pre-market low, that pre-market level. And then we'll see what happens. Even Fartcoin is down. I'm just looking here at my screen. Everything.
The fart coin.
the market leader, but that's happening a lot with what's happening here with Bitcoin. Bitcoin finally.
Oh, taking the hit there, guys. Taking the hit now, getting deep into the red here, trying to get out here. Big flush there on the TQQQ.
So yeah, Bitcoin's kind of important to talk about here, right? As I talk about all the time.
Looking for the bounce here. I'm getting washed here.
Every time I talk about Bitcoin, there's people out there that go, "Oh, but I don't care about crypto. I'll never invest in it." Crypto,
down hit hard there in the main account.
Oh, sorry to hear that, but it happens. I'm looking at this Bitcoin breakdown as more serious than anything I'm seeing in the overall market, because crypto is your ultimate risk sentiment indicator. People are not, so I made the Fartcoin joke, but the reason I have it on my screen is because if that thing's going up, it means that there is obviously risk appetite. People are buying that if they're worried about their job or the economy or the consumer or anything like that. So this is one of those things that, same with Bitcoin, even though Bitcoin to a lesser degree, it's getting more stable. The fact that we finally broke out of this range is very interesting. So unless we reclaim this very quickly over the next couple days, this could be a breakdown. And, when it comes to Bitcoin, it moves up, it moves down, it moves dramatically one way or another. So be interesting to see if we get down to kind of 72,000, what would happen there. That'd be my trade. If we get down to 72,000, I'll probably buy a bunch. I bought a bunch at 72,000 on the breakout and then sold it when we hit 100. If we get back down there, I'll just plow all that money back in because I don't think Bitcoin's going anywhere. But again, a sentiment indicator, just showing us what's happening in the overall market. And with that potential breakdown, we have 5 minutes till this. Yeah, 5 minutes till this is really cool. I like how they do this. Count this down. 5 minutes to consumer confidence. So I think this is going to be market moving, just because if you're worried about the economy and the market selling off a little bit, important to note, we're only down like 3% from all-time highs to take a little bit of a breath there. But I think you're right. You called it this morning, where this is going to be their excuse to move it. So if I were to bet, as a betting man who, again, doesn't have any dog in the fight right now, because for day trading I'm done, I say they rip it. That's going to be my bet, because we're under the pre-market level. We've done all the bearishness. We know that this event is coming. I think it's one of those potential undercut, wait for the music to stop and everyone to go, okay, now consumer confidence, and then that ends up being the catalyst to push us higher. Don't know. We'll find out in exactly 5 minutes.
We'll see it, guys. We'll see it. Keep your eyes on that one. And yes, Shane, you can rub it in. Yes, it's a beast, man. Wow. You guys have no idea, man. My hand was on the trigger for this one. It went to 680s. And I was trying to get in at 392. It's now 680s, guys. And Pfizer doing well right out the gates, guys. A nice little pullback. I was looking at this 2660s, thinking we might go to 27. Trade looks like it's happening right now, about to fulfill there on the 27 move for Pfizer. Pfizer is one of the leading stocks with volume this morning. another reason why I think it's an interesting watch here. XLV doing really well. Keep your eyes on that one, guys, to see if it can get back towards the highs and just keep pushing. I'll be watching that one, and definitely that WAFU. Wow, what a move there. NVIDIA now starting to at least turn a little bit here. So look for that 10 a.m. move, right? We'll see if we get that 10 a.m. Right now, it's been a pullback and pretty hard also in the financials. Financials starting to get hit. That's not something good to see, at least in my eyes, as you're seeing XLF get hit. Goldman Sachs getting hit hard, losing about $10 in about less than 5 minutes there. So we'll see what happens.
Yeah, we got less than 4 minutes to go. SPY is starting to rally here a little bit. We're now back above that pre-market low that we were down before. And it's interesting to note, right? Let's look at yesterday's action. It's kind of the same thing. So here's the pre-market low yesterday. We undercut and then just bounced. So if they're going to do the same thing today, this could be a little bit of a sustained bounce. But again, we've got this, I wouldn't say massive. We got this pretty decent event that that's happening pretty soon. So we need to see what the market makes of this. Again, to me it seems like we're waiting here for a little bit. Right? We're bouncing at this level. It's an obvious support zone, very kind of retail trading-esque. We're going to get this event that's going to either rug pull us completely, or I think high of the day. But it's going to be a huge event. It's why I don't like really trading into these, because they end up just being such kind of crazy events that I just personally have absolutely no edge in trying to predict. So we've got
TLT up a decent amount and with a lot of volume today, guys.
Bonds. Talk about boring and boomer stuff, right?
I mean, it's doing well on the day. I mean,
yeah.
TLT looking pretty strong right now. We'll see if that trend changes at 10 a.m. I'd be watching that as giving you maybe a sign of some change. It's been holding this whole morning. I mean, on the 5-minute chart, looking strong. I'm trying to get back towards the high here in pre-market of what do we got, 91.10 or something like that?
Mm-hmm.
Yeah, 91.10.
And it's interesting because for the longest time, it was just a story of if rates are going down, then so is the market. And if rates are going up, then, or sorry, vice versa. If rates are going down, the market's going down. But if you got TradingView, you got TNX. This is actually the 10-year rate. So this is what they expect the actual rate to be. So rates are actually down a lot this morning, and the market's down. That is a new development. That's not something that's been happening over the last few years, in which rates are it should be how it works, but how rates are kind of inverse to the market. So generally speaking, lower rates is going to be better for tech stocks and better for small caps and better for all this. And we are seeing a little bit of rates lower today. The reason I bring that up is that's obviously always going to look the opposite of TLT, right? So if you don't have access to TNX, you can use TLT. If TLT is moving up, rates are moving down, vice versa, right? They're just how that one particular works. We got about 1 minute to go, 48 seconds, and then we'll see.
Tesla with the flush, man. Oh, I missed that 90 EMA short off of the daily, man. That would have been pretty in the 361, 362. That's where the 90 EMA was at 358. It looked good off the prior support, where Tesla essentially broke from, just rejected it right back down to the 313s. I talked about eventually going to the 200 EMA. That's 303 now. We're down there. We're almost there.
Mm-hmm. We got with Tesla. Yeah, I think the area of support around 300 or so is going to be the most important. Anywhere from 300 to 350. I've been looking at that zone for a while. We got just a couple seconds left, and then we'll see if this report if anyone actually cares.
We'll see it.
So far, first move seems to be a little bit of a down push. Not as interesting as I thought, but might be one of those that, like Mitch was talking about, everyone waits for this to get out of the way, and then we can kind of do the real move once this, jiggling back and forth.
All right, we got it. Done. February at 98.3 versus a 102 estimate, prior 104. So confidence coming down. Mm-hmm. Did you expect anything else?
Yeah, it's one of those. Confidence quite often will just follow the market. Same with sentiment. If you look at any sentiment indicator, generally the market goes down, everyone gets bearish, and then the market goes up and everyone gets bullish, which is why they can be really good oscillators, right? Short when everyone, or buy when everyone's bearish, short when everyone's bullish. So we're testing lows. We'll see what happens here. So far, right, not really a huge candle. It's not really a massive reaction to this news. So we just got to see what ends up happening here.
Where does the change come in now? So now I'm watching the certain sectors that were hot. Can they get weak? So I'm watching that. And what I can do is, of course, you guys know I have like I look at the 10 minutes and the 15 minutes. I'll look at the 15-minute like change from the open and just look to see what leads. Everything in the red right now, last 15 minutes. That's something to note, right? So let's see what changes. What goes green here is so important. So you guys can see it here. I can make it a little bit bigger also. Let me actually do that for you guys. Just give me a second here. Here you go. Font size a little bigger here. Now that you can be able to see.
Yeah, SPY continuing to flush a little bit, but yeah, not dramatic news, right? We call it watching the tape or whatever it is, but just watching the candles form live. It's just not, it's not aggressive selling. It's more orderly type selling, which still means we're going down. Just means not super aggressive one way or the other. So we are, well below the pre-market range on the SP 500 now. We need to see what happens if and when we put in a little bounce. I'm still thinking not a massive red day today, and essentially just because 3 big red days in a row in a bull market like this generally will cause some buying. There's a lot of algos out there that are looking for just this. You look for the market to be in a bull market, and then you just wait for some sort of oversold reading and you buy. And quite often you get this until eventually, over time, the market continues to, or stops being a bull market. One thing that's very important that I think a lot of people saying that I love, that I think a lot of people should know, is the whole
boom, hit down, guys. Down she goes. The eval taking a hit there, guys. Boom, boom, boom. RIP today on the eval. Definitely taking a hit there. Gonna look at the smaller caps. I tried to catch a dip there, and there ain't no catching the dip right now. Dip.
Not yet, no.
Getting hit there. So boom. I tried it off that low there, and nothing holding right now. So 3, 4 candles straight down now, and we'll see if it turns there. But definitely hard hit today on the Qs.
Yeah, interesting looking here. So the next area of interest for me anyway, if we are going to continue this sell-off, is just this wick that we had from, this was one of those gap downs that they just bought off the open and ripped the thing. If that ends up occurring, then that might be an interesting zone to keep an eye on to see if we find some support there. It just, again, I want to say ugly, but that's from a day trading point of view, it's ugly. But if you look at it here, right, we're down 3.17% from all-time highs. So it's important to kind of keep that in mind as well. Yeah. Novo Nordisk is actually showing up in the algo here. If we go NVO. So that's going to be some kind of healthcare related, where we're going to look to, if this thing breaks, could be potentially a little bit of a short there. Again, this idea is you're just looking for things that are overextended, or gapped up, not necessarily overextended, spending some time over VWAP and then breaking down under VWAP. And that's kind of the idea behind here. Again, I'm done with the trading today, but this one's interesting. So a couple of the stats that I've done with this system, if anyone's following along with it, you want these to trigger early. You're talking first 15 minutes to first 30 minutes of the day. That's generally where you get the flushes that we're looking to see. And later in the day, I'm going to work on another setup. Again, if I can end up passing an eval with this particular setup and kind of show how things are going there. So people sharing some stories of being stopped out. Listen.
Yeah, the RIP, the one that you don't like to see. Yeah, it happens, guys. You guys saw it happen to me here, guys. Been trying to bounce back in this eval, and it hasn't been going well, guys. This was the one that I got like 4 cents, and ever since then, it's just been disaster, man, disaster as much as it gets, guys. I went from being about maybe about $100, $200 off, and then now I'm back down I'm in the red now, guys. So it's been ugly on this one, and it's how it happens, guys. And this is so important. You got to stay focused. You got to be able to catch it when it starts to come down. And right now, it ain't looking good in that main account. That's why I'm just focusing on keeping the funded account in the green also. Yeah. I've been taking very slow chances, and this might be why I'm also risk adverse. Missed a big trade today because of that too, right? And so that's when it gets a little bit tough. Like WAFU, that was more of something up my alley. Should have taken the trade, but missed it, and that's how it can be sometimes. So I think the important thing now is understanding that, hey, the market is causing bleeding. And if it's causing bleeding, one of the things you need to do is cut off the bleeding, right? So got to put the belt on the leg and call it a day. And sometimes that's going to be it. It's not about pushing, right? Because everything in me tells me, well, now grab the TQQ in the funded account. Well, that's an easy recipe for disaster for me, even though I can see it, right? But everything's going to be telling me that doesn't mean that it's actually going to work out, right? Like, even right now, right? It tells me, okay, go for it, though. Go for it. Bouncing. Well, no, man. The truth is that I took strike one, strike two, took the hits, took the bleeding today. Hey, that's how it goes sometimes, man. I tried to play the big trade, didn't work out today.
Yeah. And again, it happens. I told you guys, as soon as I pass one of these accounts from a day trading point of view, I'm gonna show you all the ones that I blew up. And there's a couple. There's a couple for sure. So it happens. And the difference, I think, between us and most people you'll see online is most people would have hid their screen there, right? And just talked about, oh, I'm just down a couple bucks, and we'll go and talk about how awesome they are somewhere else, right? I came in fully admitting I am okay at swing trading. I've got some algos and some setups that work very well on the swing trading side of things. I'm awful at day trading. So it's one of those where, again, you got to be honest with it, right? And just understanding that the point of these eval accounts, and I see a question about them, is that what we do at Trade the Pool is we do evaluation. So it's a prop firm. So if you end up passing, you're going to be trading with firm's money. So it's very important to have these evaluations in which you test your trading style and philosophy or skills if you're discretionary. Sometimes it works out, sometimes it isn't. So I always describe it as kind of paper trading with benefits, right? So
yeah,
I'm testing these theories and these ideas that I have on to but to add day trading to what I already do with swing trading. And the idea is, if I end up passing these accounts, then great. I will get a funded account and I'll be able to trade other people's money with them. And if not, it's just paper money, right? The $20,000 account costs you $100, right? So you put in your $100, you try your strategy. If your strategy sucks and you blow out the account, you lost $100. If you were trading your own money, you probably lose way more than that. And then eventually, as you hone your strategy, as you hone your style, and you get something that works, if you end up passing, that $100 turns into a $20,000 account that you can then start to make withdrawals from and make money from. So that's what we're trying to do here. So when Mitch, just for the people who are kind of asking here, when Mitch said he was just stopped out for the day, it's another massive benefit of prop firms, especially for day trading, right? Day traders very much they can go on tilt, right? They can trade things that they shouldn't trade. They can do things that they shouldn't be doing. And then they end up blowing up a whole bunch of money. And, when it comes to your own account,
with great power comes great responsibility.
And yeah, if it's your own account, there's no one to stop you. There's no one to stop you from going crazy and blowing it all. What they do with prop firms is there's generally a daily risk rule that says, all right, you're not doing it right today. You're not feeling the market. Your strategy's not working. It's time to stop. We're gonna shut you down. You're not gonna be able to make any more trades. Come back tomorrow, right? Go outside, kick some rocks, walk the dogs, do whatever it is, and then come back tomorrow. So that's what happened to Mitch. Is he took a couple trades, they didn't work out, and the system goes, okay, just relax, come back tomorrow and give it another shot. So that's what we're seeing there. The market just continues to kind of chop around here. And this is one of the things too that, with Mitch talking about multiple accounts, is he's looking to trade different strategies and different styles and different accounts. So he can very easily go, okay, well, that strategy isn't working for me right now, so let me go over to this other strategy that is. So
And then that's the key too. Is always is the transparency and taking the hits and learning
Mhm.
from it, right? I mean, at the end of the day, I came in. I told you guys immediately that day with the VIX trade that I was literally 4 cents away, guys, four
Mhm.
cents away, and I would have had this the 260, the buying power, right? The big boy,
Big
right?
guy.
I mean, and so I think that that's the key, right? And that's different strategies, right? Because that's what I've been trying to do. Also, is a little bit of mix of strategy, smaller account for the smaller trades, bigger account for the bigger trades, right? It just to keep it simple, right? And I think that the key there is also just learning. And I've tried a different strategy today. I tried the hour of the 30-minute pullback. It didn't work today, right? And that's how it goes, right? I think that that's the key is looking into more of that style of trading. And I wanted to attempt it today on the pullback for the SQQQ or the TQQQ, and it just didn't work out today. We'll see if it starts to turn riff here. I think that what you're also seeing is the leaders, like I was wondering, could Nvidia come back today? And that's just been on the leak, right? Apple's on the leak, Microsoft leaking here, guys. And so that's the key also is we're not even getting some of these big boys, and Tesla just beating down the 312. It's just the big boys are taking the big beating. Even Meta, that was strong, right? Now it's been on kind of what, the streak straight down after the streak straight up. What do we got now? We got 11 days now, almost 10 days of straight down action. So something needs to change here, right? And what needs to happen? It needs to be Nvidia's earnings tonight, because if it isn't,
Tomorrow
that's
night.
it's tomorrow night. Is
I think
tonight?
it's tomorrow. I thought it was tomorrow night.
Hold on.
26 Wednesday. Yeah, tomorrow night. So we could have another day of this
Oh,
nonsense.
good Lord. We got to deal with this nonsense for another day here.
Yeah, unfortunately. So
All
yeah,
right.
and right, it's just we're
And then
seeing
we
a
got
bleed.
also PCE on Friday too. So I think this is going to be one of those where they where it might make sense to look at the weekly candles at the end of the week, right?
Yeah.
Versus the daily candles. The daily candles are going to be scary. That doesn't mean that there's not opportunities out there. I think that's important to mention.
Oh, I've been still on my swing accounts. I've still been buying the dips in controlled fashions. I talked about with everyone, kind of Jeff yesterday, right? That made me look like a genius when I bought it down here, and now it's coming right back down. Hut I bought, and that's pretty underwater on that one. Udemy triggered today. I'm going to watch this one. So yeah, I'm continuing. It's one of those things that I'm going to buy the dip until buy the dip stops working, which certainly can. And the amount of times that I bought the dip and it did work will offset when I buy the dip and it doesn't. And then we can go from there. So yeah, this is this Tesla we're seeing this across the board, right? A lot of kind of broken charts, a lot of broken support. But like Mitch was mentioning, we're only 2 days into this weekly candle. So what if this weekly candle on Tesla ends up looking like this weekly candle right here where that support held? Who knows, right? It's one of those, it could not. We have no way of knowing that. So what we need to do is kind of stay light on our feet and say, we need to see what happens with tomorrow when it comes to Nvidia. And then, yeah, if you go here and you look at for the rest of the week, big reports. So this is filtered now by things that are considered incredibly market moving. We got 2 on Thursday. We got 2 on Friday. So we've got GDP growth rate. We've got durable goods, and then which are inflation and economic type ideas, and then PCE, personal spending, personal income, very important numbers here as well. So a lot of big numbers coming in on Thursday and Friday, and then we have of course Nvidia earnings, which I think are everything right now. So LI, another one would have triggered from the setup here, right? Would have triggered on this candle right here, and that one would have worked as well. But trying to be a good boy, trying to manage my risk, stick to my plan, which is take the money and kind of run away. So yeah, that's what we're trying to do here. DOCN is another one. So there would have been 3 so far today that would have ended up doing okay. So I took PayPal. Is PayPal. Yeah. So PayPal is probably going to look, I was set a PayPal right here, but it's one of those, just trying to remind myself. The point of this is just to make a couple bucks and go home. Kind of annoyed that right? It got in PayPal right here, and now it's bleeding and down on the day when this thing was from something that gapped up. But that is just because we're having this kind of outside move in the market and no other reason really. So just going to keep an eye here on the SPY and just see what ends up happening. There's nothing to kind of do for the rest of the day. The shaded box that I have in here was the daily chart that I mentioned. We are getting into this wick low. If people remember this day right here, I can actually just shut off this alert for now. I don't need it anymore. Yeah, this wick right here, this was another one of those gapper down and rip. This was, I think, more tariff talk or something, one of those one of those Mondays that was very stressful, and then all of a sudden it just ripped. We're back into that zone, so it'll be interesting to see now that we're into a place that it bought before. Do we end up seeing buyers in this particular zone? Again, not planning on kind of stepping in front of this guy. There's nothing really out there that will save us. The only thing, funny enough, the only thing that we could really look forward to is Trump coming on and screaming about something, which he might. I know he probably watches the market and says, "Oh, the market's down. Let's do a tweet about how."
No, he watches TTP live, of course. That's what he has on right now in the White House.
Well, listen, give me a second to mortgage my house and get into everything, and then I'll hit the bat phone and see if I can get him going.
They probably actually have a real phone in the White House, that old looking building, man. I don't even understand. It's like you go in there and you feel like you're going back in the ages, back to the 60s. It's like you would think that they would have some modernized the building a little bit, right? Like,
no, you don't need to. It's not like not an important buildings. There's not going to be important documents or anything in there.
You know what I mean? Like it just looks pretty like oldish looking in there. It's like these old rugs. Seems like I'm going back to the 70s when I see things come out of the White House. But hey, that's how it goes. Stock options are running out on Friday too. Yeah, reversals could be coming in. Expiration comes into play. And don't worry about it, Cliff. If you were changing my diaper, we'll get over it, my friend. Don't worry about it. It happens to us all, man. I needed a diaper change today. I think we all needed a diaper change, at least I know I did. But hey.
No, so we're just continuing to sell, right? There's really nothing to talk too much about, right? We can start looking for
man. I'm looking at the small cap world. I'll talk small cap world at least here. I'm looking at JTAI over here at the 9. It's kind of like holding this 9 EMA. To tell you the truth, at this point, it's hard for me to play these plays. A lot of the times I like to catch the early runs, right? It's hard for me to play the middle of the run in these small caps. And this is where it's at right now. Do I like it above 9 here? Yeah, it gets me excited, right? The chart recovery of that 9. And then there's this kind of topping action off of this 59. When you get above it to 9, come back to it. You wash out the 9 buyers, once, twice, and then the third time. Let's see if they can actually hold it off of the 9. You see how it wicked again there. So let's see if we can now take the 9. You see how it's above 9 right now? Look how Tess is there, 9 on the offer. 9 on the offer, 9 on the offer, 9 on the offer, right? Well, watch. This is what I'm mainly watching. The bid is opening up. Why? Because it's just washing out people that are doing quick stops. Like if you had an 890 stop there, you got stopped out. Now it's back above 9, right? And so the idea here is really in this 1 minute, where does it close? You got 30 seconds. If it's closing above 9, it's looking strong. This is how I look at small caps, guys. The key is, can I trade that? That's a whole nother thing. I've seen these enough to know the action. The key is, can you be fast like that in your mind and being able to trade it? Another thing, sizing, important here, right? Let's say if you went too big there, you only wanted to risk $100 and you got 1,000 shares. Well, you got stopped out for that $100, right? And so you got to be thinking, these are all things to think about. That's why I like the sizing that I've been doing with this account. It's mainly like 100 to 300 shares, because when these run, $1 comes quick. $1 can come quick, right? So the way that I think about it, $300 on this account would be great, right? And so those are all things that you got to be thinking about. How can I manage the risk on a high flying or volatility like this? Another thing that you can look at is look at the 1 minute and look at the range, right? This stock alone is doing from 860 to 920. So about 60 cents in 1 minute. Can you handle that risk? Do you have the sizing to be handling that size of volatility, right? All things to be thinking about here. And you can see how it tested the 9. It actually closed that right towards the high there. It closed 911 and washed right back through the 9. So in my eyes, this is when I start looking at them as shorts, because now I at least have multiple levels to go off of, right? Same way that a short would be looking at this now. So I think that you got it both hands here now. You can see that a down action coming back to the 9. Now the shorts are looking, can you wash that and hold off the high? We'll see what happens here.
Interesting here. I was just going through as the market just continues to bleed. Now we're well into that level of that candle that I talked about. I was going on a little trip around the world to see if this is a worldwide event or if it's just America having a hard time. Right? EWP, we're talking Spain. Spain's doing just fine. So this is what I spend a lot of my time on down days and on flush out days looking at. Is just saying, where is their strength? There's not in a lot of the sectors out there. A lot of that stuff's bleeding as well. So I'm going on a little trip around the world, right? Japan is doing okay. And the idea is just to say, if this market is going to continue to bleed, there's going to be some strength somewhere, something that we can look at and something that we can put our money into, because obviously we're going to get stopped on a lot of long trades if we're honoring our stops correctly. So, kind of expand out a little bit and say, hey, if I end up seeing something through here, there's Austria, just in case you ever want to invest in Austria. Is there something that then can be investable inside of the US that has some benefit here as well? So I'm thinking, if you find a Brazil, for example, is doing great. So maybe go look at some Brazilian stocks. Maybe there'll be some there that end up having their chart look well. So this is where, the job comes in, I think, when it comes to areas of interest that we could get involved in. I'm just going through and I'm just sorting my ETF list by what's still up on the day, because there's not much that is. ITB and XHB are both home builders. So these are just two different ETFs that represent home builders. XLRE is our real estate ETF. Real estate and home building is doing fine. So you could look at something like Toll Brothers. That's still a company, or am I too old? So Toll Brothers is still a company. Interesting area of support right here on these names, and it's holding. It's just a good, the whole Warren Buffett quote of, right, you finally know who's swimming naked when the tide comes out, or something to that respect. This is the best time out there to look for relative strength, because there's not going to be a lot. You're not going to have to go through a million setups to find some relative strength. But B, if you do find something and then the market stops going down for a period of time, these are names that have explosive potential. So Toll Brothers, the more I look at this chart, this is a really interesting chart where there's a big support area that things could hold at. So very much watching this closely.
Tempest setup. Take a look at that one. Interesting chart. Of course, had the earnings came in, not the best earnings today, but it's holding in here. Going sideways off that 60, just undercut it, recovered. Looks interesting.
What I like about this one, so full disclosure, I'm in some of this Tempest, right? I bought some kind of in this area right here. We were talking about this, the AVWAP from the IPO, just the average, where's the average person at? You can see how well this stock respected this IPO AVWAP right here and here. Back here again, when it broke through there, it rallied, and then it's back to that right now. So that's really interesting. It sat underticked that just a little bit and then started to bounce again. That to me looks very algorithmic when you see an undercut of something like that AVWAP. That seems very interesting, right?
Healthcare hanging in there, at least. That's the one area that I see hanging on really well in the market, at least overall. Lily's still hanging out also, so we'll see what happens there. That one's just recovered 900, was at 910, a little bit higher this morning, 912.
Yeah, so we're getting down to the low of this prior candle, and the reason I'm interested in this candle is there's no technical specific reason other than the fact that this is the last time that we saw buyers really step in and negate sellers. This is the last time. We saw a little bit right here, and then we saw a little bit right here. So this zone between these two candles, the gap down and rip, this is where there was a lot of sellers that came in and buyers said, this is a good price for the market. I'm going to buy it here. So we're getting back to that particular zone. So that to me gets very interesting as a potential place to say, okay, if that is the area in which is going to be defended before, or is it going to be defended again? And we don't know, but that is mainly the point of technical analysis. Is not, I'm one that I love demystifying as a CNT technical analysis. We're not drawing crazy bat patterns and doing all this stuff. We're just saying, where are areas in which buyers decided that this was a fair value for whatever it is that I was trading before? And then what is the trend? Trends persist. Support and resistance ends up being very important in those trends. So we're obviously in a massive uptrend in the S&P 500, right? We're down, 4% from all-time highs. That's, to me, a great uptrend. 3.5, so we're not even 4% down. And this is the last place that buyers came in and took control. So if we are going to see any kind of a bounce today, to me, it makes sense that we see it in this particular zone right here, where we had this happen before, so maybe it can happen again, where this is where buyers come in. So this is going to be an area to watch. If we break this low and close below this low right here, that could potentially lead to more downside. I think it would be super poetic if we go out, and we can delete these because we don't need these anymore. How just poetic would it be in the market if we just broke that all-time highs on this candle just by a little bit, and then we come down to hit these lows again, and then we bounce, and we just continue to do what we've been doing for the last 3 to 4 months, which is just chopping around in this range. For me, I think that's a distinct possibility. I've done kind of the stats with you guys before, in which year 3 of a bull market is generally a choppy one. We are in year 3 of a bull market, so it could very much be a choppy type market. It wouldn't surprise me at all if we spend most of the year hanging out within this range. That wouldn't surprise me. So yeah, we continue to kind of mess around here, not really seeing anything one way or another that gets me too excited to take a trade on either side of things.
I agree. I'm looking around and there's just not much, guys. I want to take a trade. I'm here searching. I'm searching.
Mm-hmm.
I'm itching, especially in the small caps, but I'm just not getting it. So, hey, it is what it is. Sometimes if they're just not showing up, there's not trade to be made. There's not a trade to be made.
Cisco is kind of interesting here. Right? Gapped up this morning, came down, hit the 2-day VWAP perfectly, held. Not something that is going to be a huge mover, right? Cisco isn't a wild, insane stock that you're going to get a massive gain out of, but it is something interesting that it's holding very well, right? Again, my hunt is always relative strength. What are they, quote unquote, not selling? What is the market, not interested in getting out of when it's getting out of everything in the world? So the fact that it's green on the day, that's going to have a lot of traders starting to look at it. A lot of algos are going to be kind of focused to see if we do get an up move in the market, they're going to go after the things that we're holding higher. So I'm saying ABSCI. Jeez. AB. If it's got that many letters in it, it's probably, no, I was going to say it's probably on the pink sheet. Oh, ASBI. That's the ticker. Yeah, that's a bit of an ugly move down. So this is one that's not a D-SPAC, but it IPO'd at $20, and now it's down at $3. It's missed earnings. Look at all the times it's missed earnings. Holy smokes. Red down arrows means they've missed earnings. Green up arrows mean they beat earnings. They've only beat earnings once in their entire life. Tried to break out. Looks like it's failing there. That's a bit of a gross looker to me, to be honest. And someone was asking what about SMCI. I think me and Mitch are totally on board with this one, that it is, be very careful. Anytime the DOJ has knocked down your door, you have to be very careful when it comes to what happens next. If the DOJ is knocking on the door saying, hey man, we think you're scamming people, you got to be a little bit worried, right? So
yeah,
pulling back with the rest of the market, I think they finally reported some sort of earnings, which is good for them. They finally have earnings that they can talk about. So faces NASDAQ delisting. Yeah, that's not what you want to see. SMCI drops on result of deadline day. Supermicro faces NASDAQ delisting. So there we go.
Fishy stuff in a fishy stock.
Yeah, exactly. Stalking.
It's like the corporate headquarters of SMCI are at the nearest fish market, and you walk in.
So what you're going to get with that is volatility, right? This is a $16 stock in November.
100%.
That's now a $60 stock now. So you're going to get that, and it's fine to trade volatility. You just got to know that you are trading volatility, that you're trading something that's, you could wake up tomorrow and this thing could be gone, or very, very low. You could wake up tomorrow, this thing could be holding on and doing amazingly and take another little pop. So technically, interesting area here, around 47, 48 bucks, right? This is the big shelf right here. There's a lot of sellers in place. Could be interesting. Just one of those, hey, I wouldn't want to wake up if they say you are off the NASDAQ, you are immediately kicked out of the S&P 500, right? Which this thing somehow got into. So you're kicked out of the S&P 500, you're kicked off the NASDAQ, you're on the pink sheets. Instantly, you have every institution that's invested in you forced to sell. They have to. They're not allowed. Most institutions are not allowed to trade pink sheets. This is why the marijuana sector has been so beat up for so long. They're not allowed to trade pink sheet stocks. You're not allowed to trade stocks that get kind of kicked off of NASDAQ. So, you gotta take a little break, right? Take a little breath and kind of see what happens.
Of course, all the bears are out, guys. I talked about it on Twitter this morning. The bears would be singing, and this is just going to make them sing louder. So get ready as extreme fear starts to hit the market. And this happens a lot of times when we get these types of downward action. I think one of the things that's being talked about out there, of course, is the tariffs, the anti-immigration, Doge. The truth of the matter is, I think these are all things that are affecting the market, but haven't truly leaked into the market. None of these, I think, have affected the market. Actually, it's just more what the forward-looking outlook is, and that's what I think a lot of people are placing bets on. That's why we're seeing some downside action come in. The question is, do you agree? I think that's what it is.
If extreme fear is leaking into you, with the market down 3.5% from all-time highs, you are way too big in whatever it is that you're doing. That's like the one thing, I put out some snarky tweets sometimes on Twitter, and one of them was just like, I think I showed this chart right here and just said, this is what everyone's afraid of. Everyone's panicking right now after this, right? 3% down.
It's just how it goes, man. I think part of this is the mentality of that. I think traders trade majority to the upside. This is another thing that I think is a reason why I sometimes get on the short game. And I think you just got to know what type of trades you're seeing out there, right? But I think that's one thing that I noticed is that a majority of retail has a tendency of longing only. And so in these situations, they go in extreme fear, because there's like not many longs to be had, right? And unless you really stick to the right sectors or industries right now, it's going to be tough if you're long only, right? And so we'll see if things start to get back there. That's why I've been watching the XLV all day long. And that seems to be the only sector out here right now that just seems to be holding on here. Of course, you could look at real estate, but I don't really focus on that too much. The defensive area is, of course, a big watch to see, and those are doing well. So that's an area to look at. The value names, right? Soft drinks are doing well today in the last hour, right? The confectioners. So Hershey's making the lift. Mondelez. It's the boring stuff. The stuff that retail doesn't like to trade a lot of the times. And when you don't like to trade those, well, a lot of times what it's going to do is just give money to the institutions. And look at Pepsi that we talked about this morning. It's doing really well. Take a look at that chart. I mean, I think that stuff like this, you got to know. Yeah, the pep. Getting the pep in the step. Look at Coke, KO, right? You have to. This is why it's so important to know the rotation, what's coming in, what's coming out. What's coming out? Technology and energy right now getting dumped hard. What's coming in? There's some defensive names. Now the only question is, when did this turn also, right? Those are the things that you'll be looking at. I think the market's trying to play a little bit of some bottoming action here. I see two bottoms around the 510.43, 510.40 area, now coming back through the 511. But I think what you're seeing is just a bunch of retail just waiting, trying to buy the dip. And remember, the market is going to hurt where it can hurt the most. Is the most on the bear side yet, or is the most still in the bullish camp? Things to be asked.
Yeah, and I think the one thing that really hammers home your point of it's the boring that's going up. So we got old Uncle Warren cranked new all-time highs yesterday. Massive breakout on what's just an insanely strong move. And then we had people, I can't believe people said that she was the next Warren Buffett. Now she's the largest single wealth destroyer of all time, just getting absolutely shellacked, right? So if you need to see a chart that says what's going on in the market, I just think you got to look at this, right? We got ARK getting destroyed. We got Berkby doing fantastic. So it's just you just think about what both of these people invest in, right? Uncle Warren, he invests in companies that make money and make things that people can then consume and have money based off of. So he's doing great. Kathy invests on a kind of a hope and a dream and a wing and a prayer, and that's doing bad. So when you go look at everything and you try to look at what's doing well, you're probably going to see a lot of that theme. Does this company make money right now in this moment? Does it make a thing that people can buy? It's probably doing fantastic. Is it something that potentially kind of sort of might make money down the road? It's probably not. So it becomes pretty easy then to sort your life and say, okay, well, let me buy more of the thing that's doing well if I want to ride that trend and then get out. And again, these moments for me, I love these markets as a swing trader. I know if I open up my account right now, it is going to be very red, most likely. But I have a whole bunch of lists of things to buy, things that are holding up, things that are looking okay on the chart. This Udemy that I talked about earlier, if we hold this gap candle on Udemy, I'll be buying this into the close. A couple of these names, right? If Bitcoin starts to bounce, I'll probably lag in a little bit more to my HUD 8. A lot of these names are going to look interesting if we start to get a bounce in the market. They're going to be nice pullbacks that we could potentially get into. So it's a very interesting game out there, and we're just waiting to see if this bounce on the market turns into anything. So one thing I talked about yesterday with Steve that I started doing a little bit after talking to my buddy Brian Shannon is when you have really wide range days like this, you just start to anchor the VWAP from the bottom. So instead of trying to be the guy who catches the bottom, he will do something where in a day like this, if he's looking to buy, he'll anchor a VWAP from the top or the bottom of a really large move and see if we can get a bounce from here and then a pullback to this price, and we hold this anchored VWAP, that ends up being an interesting buy because it just means the average person who has been buying from the absolute low, that person is defending that price. That's very kind of algorithmic in nature where it's, okay, let's buy that thing as it ends up holding. Just going through again, some of the sectors. Again, a lot of this makes perfect sense, right? Home builders is one thing that's shocking to me. So that's something that I will do more study on. The rest of it makes a lot of sense. We have, real estate, and we have healthcare, things that are doing well. KIE is insurance, right? Again, things that make money and make money right now. That's the kind of thing that people are gravitating to, and they're just dumping a little bit of large cap tech. Could be a little bit of a rebalance that we see here, but I think this could continue into tomorrow, and then whatever. It's all in NVIDIA's hands. It's all the whole world, right? It's that meme, right, of the Atlas holding up the world, and it's just the NVIDIA logo on them.
Yes, I think that's why you got to keep watch, right? Because they might move it before then. And I think you're getting a nice little, at least attempt at recovery, right? We'll see if this actually can bring the market some. I'm watching like XLV kind of hanging in there. Starting to see some financials come back, so I'll watch to see if those could get back to unchanged. So maybe some financials start to lead us back, and it's not just the tech names, right? Just look to see if there's other sectors that start going into the green.
Yep.
That's what I'd keep my eyes open for.
The boat ETF shipping is doing okay. NOBL is one that, again, that makes sense. So NOBL is dividend aristocrats. So it's a good way to look at companies that are, again, safe and boring. A dividend aristocrat means you've raised your dividend every quarter for, is it 10 years or 20 years? So this is just an ETF that only holds those companies that, again, pay a good dividend and they raise their dividend every single year. So inside this, you'll see things like real estate companies and Coke and Pepsi and these quote unquote boomer type names, right?
Yeah.
That makes sense.
Let's take a little bit of a sector view here, guys. Of what sector would you guys prefer to have opportunities in? And I'll throw it just as simple as, let's just do it to the ETFs, right? Let's do XLP, consumer staples, versus XLV, right? And which one would you want to have based on the chart, based on maybe it's the holdings, maybe it's multiple things. So you guys in the chat, maybe drop a comment or two in it. For me, if I take a look at those, of course, I think that I'd want to go with the growth one that's coming back. It's XLV, and looking to see if those healthcare names can stay strong. But that's because of that, right? Because I feel like the upside it lasts longer when this runs. Now, XLP, believe it or not, I mean, from the up action from the 76, that's up in 1.3 months, 9%. One thing that happens in the consumer staples is it's a lot less sexier, but more consistent on the pullbacks here and holding the 90 EMA really well versus the XLV, which is kind of going in between the 90 EMA right now. Kind of went back and even undercut the 50 EMA. And so that's also going to bring some more volatility and ways you're looking at it. So, hey, drop it in the chat, guys. Which one would you pick? Is it XLV or XLP? I'll let Michael give his outlook.
If I could pick one, I'd do XHB. I'm just super interested. Look at this support zone. This is very interesting to me. And it's one of those things that you don't expect to be doing well if people are worried about the economy. If people are worried about jobs, if people are worried about inflation, you wouldn't expect to see that working. But for me, I'm going to go with XLV as well between those two. I like that it's broken this anchored VWAP from all-time highs. So if you started to buy XLV at the worst possible time, you're actually doing okay, and you're going to get a little bit more beta. You're right. XLP is one of those where you're going to get a nice juicy dividend. What's the dividend here? 60 cents. So yeah, what, 1%? So yeah, about 4% a year. So this is one that if you're worried about what the world's going to do, you always know that Coca-Cola is going to make money. People are going to buy Coke. They're going to buy Pepsi. The world could be coming to an end, and they'll just sustain themselves.
Warren will be buying it
on Coke. He will be buying it with both fists. And the beauty of something like this, again, if you're worried about the economy, is you're going to get paid dividends, right? So you're getting paid. Yeah, it's roughly 60 cents a quarter. You can see, 60 cents a quarter over and over and over again. So even when nothing was happening here from 2022 to 2024, you're getting paid 4%, 5% on your money just over and over again. I think that's if you're talking long-term holds, something that's hitting new all-time highs and it's paying you a couple percent a year, I think that's wicked. But it's not going to, from capital gains point of view, right? You're not going to get a big move there. So if I was worried, which I'm not, we're down 3% from all-time highs. But if I was worried, that would probably be a place that I'd put a bit of my money into XLP.
XLP, I mean, it has some names at the top, right, that have been doing well, even on the day today. Procter Gamble, look at that chart. We talked about it before the bell, but I don't think any of us traded it. Let us know in the chat if you guys traded Procter and Gamble. Really nice move there, at least from that name. I mean, can't be mad if you traded that today. I mean, that's just straight up. Discount store is getting a little bounce there. Of course, the household names are the ones that we're looking at there. KMB, also Colgate Palmolive, having a pretty good day there. So just naming a few there that are interesting, definitely to keep an eye out. I didn't expect to see it. And of course, as the market uncertainty comes back in, the old Philip Morris trade.
Everyone needs their Coke and they need their smokes, right?
Yeah. and the best part is Philip Morris doesn't even sell. I don't even think they sell, like, they're going tobacco like lists in their approach too, and things like that. And look at the chart though. Look at the takeoff from January. This is a little bit scary, my friend.
Yeah, I don't know if I've ever seen this thing too expensive. I've been saying this for generations. This guy will be, if marijuana ever does get rescheduled, this guy will be the winner of all of that. It's not going to be the little ones, just like with the psychedelic space, right? And I'm an investor in a lot of those names. They're going to get bought, right? And it will be a Johnson and Johnson or a Pfizer or something that ends up being the ultimate winner. That's what I see in Philip Morris as well, is that they're just waiting. You know, they have a bunch of contracts sitting on a desk somewhere. The second the reschedule happens, they're going to pick a couple of these companies that have just been obliterated. They'll just buy them up. They've got the land. They know how to grow things, right? They've got all that sorted. They're going to be way better off than some of these other names. They're just going to pick up a couple names. They're going to assimilate them in, and away they go. So, but yeah, what a chart. It's not something that you see too much from a staple type name, something that's so boring, but it's one of those. I try not to poke too much fun up here beyond my ice wall at Americans, but I just think it's funny that when the world looks like it's coming to an end in the market, your guys' smokes, your guys' Coca-Cola goes up. And that's probably why XLV is going up too, because if you consume too much of those, you're going to need a lot of healthcare. So it's
and then Mondelez too, right? If you're not into the tobacco, maybe you're just into downing it down with some sugar.
Yeah, sure. Grab the sugar.
I need some sugar, man. The market's hitting me. I need some sugar.
So there's a couple booze companies out there. What's it? Samuel Adams.
Oh, Sam's.
It's how is that doing? A little bit of a bounce today.
And that thing's made a round trip, if you can say the least.
Oh yeah, look at that. That's what
that round trip, man.
Look at that pandemic play. So
dude,
from 250
insanity in the pandemic play.
Like, yeah, what do you got to do? You're locked up at home. Get your Coke, get your smokes, grab your beers. Just have a good time. See, I can't legally invest in, I can't trade any of these, or the Canadian government will come get me if I buy an American beer company. With Sam and Bud. Is Bud the other one?
Yeah, Ambev. You got Tap.
Yeah, Bud hasn't done anything. Tap hasn't done anything for ages. Yeah, these aren't great.
Tap doesn't look too bad in this environment. It's holding on right now on the 60. I mean,
yeah.
If you just look at it, right? Because this is what it means is that. So a lot of times, and I talk about this before the show, we talked about this also. When uncertainty comes into play, that's when fundamentals come into play.
Mm-hmm.
This is so important for traders to understand, I think. Not only day traders, swing traders, investors overall. I think you hear it talked about all the time on CNBC, right? You turn it on, but this PE ratio, blah, blah, blah. But the truth is, that only matters at certain points in time. Certain points in time, things can run straight on technical analysis. Certain point in time, things could run on a market run. It could just be the overall market just lifting all the boats just get lifted with the tide, right? Yep. You hear that, things like that. That's why it's a dynamic environment. You got to understand the main variables. I talk about this in 4 different variables. There's more variables if you want to break it down. But the truth is, I think it's overall market, it's story, it's fundamentals, and it's technicals, right? So all 4 factors can be playing in on a stock at once. Certain times, one's going to lead. It could just be that it's a story stock, and everyone's talking about it, like Quantum, right? Those names that were just ripping through the moon. Wasn't even technical analysis that these were really running. It was just pure enthusiasm for the stock, the story, the idea of what could potentially come. Then what happens? Usually the dash for trash happens. The more trashy stocks make moves. Something happens. Something breaks. What broke? Well, Palantir definitely broke.
Yeah.
And the euphoria started to break. Then HIMS started to break. The euphoria started to break more. Then you start to stop believing in the trash and you look for, instead of the dash for trash, it's dash for quality, right? Really quick flipping of the mentality. And I think that's what we're seeing now. Dash for quality. So I think you continue to watch that. What does that mean? It becomes a stock picker's environment, right? Where you need to be on the right stock, and certain sectors might be choppy. Michael's talked about how this year could be that choppy year.
Yep.
That plays into that environment, right? If anything. So I think you got to continue to watch what stories are hot, where fundamentals are actually starting to play and mix with story, right? So look for those earnings to be actually important now. And that's why you're seeing certain stocks getting hit on forward guidance, right? They're giving a bad forward guidance. Well, it doesn't care if you beat and beat. Well, your forward guidance is bad right now. It actually matters.
Mm-hmm.
There's a point in time where you can give a bad forward guidance and the stock goes up. You're like, what the heck? Well, that's the market, guys. That's the true market. It is not one way. There's not one answer. And unfortunately, what does that mean? Oh, you get a whole bunch more of Money Mitch and Michael Nas here, because the market's going to keep it evolving, right?
Mm-hmm.
Changing. And that's where it's important. That's where swing trading comes into play, where you can be in a more deeper time frame and looking for that mentality to work out, right? So from this point on, this is why it's so important to know when rotation goes against you. I wanted to kind of talk to you about that, Michael, and how you deal with that in swing trading. I know that was one of the things that I felt really indicated in my data, whether I'd be big gaining in a year or just small beating the SPY, is being able to kind of get out when I needed to, right, quickly. And then also being able to certain moments, letting the market determine that, right? Do I need to get out? Where's the rotation? Those types of things. How have you looked into that, Michael?
For me, it's what you're talking about with multiple markets. It comes down to trading multiple systems, right? It's one of those, if we are in this choppy market for a long period of time, I have mean reverting and pullback systems. All the kind of swings I was talking about today were all in that kind of bucket, right? Udemy and things like this that are down quite a bit. I'm looking to buy them for a little bit of a short-term kind of bounce. In nice trending markets, I want to be in trend following systems and focus on those, because what you mentioned when it comes to fundamentals is you usually have an overshoot in both ways. You have maybe Nvidia is fairly priced at $100. Well, if it's trending, it could go to 150 or 200. And then eventually when the music stops, it will come back to that fundamental type price. But depending on what you're seeing in the market, you're leaning a little bit more on different systems. Now that we are in a choppy environment, again, I've just been simply leaning on mean reversion and choppy trends to try to rotate around those. Because so when it comes to it, what I want to do when it comes to rotation, looking at different sectors and everything is great, but I want to rotate across different strategies, across different time horizons. Trend following, for example, especially from the swing trading, if I'm in a good trend, I'll stay with that guy for months to a year. If I'm in something that's more of a mean reversion type setup, I'm probably out within a week. So just understanding that, I'm spending a lot of time in cash right now, looking for moments like this where the market dips. I buy a whole bunch of names, we get a little bit of a pop, I get out and I kind of move on. It's not what I want to do. Ideally, I just want the market to trend all the time higher so I can just own a bunch of names and make money every day without thinking. But I think we are going to be in that environment again, potentially all year, where we are, buying the dip, selling the rip, doing this over and over and over again. Interesting here, just looking at the chart of the 1 minute on the SPY. So I anchored that VWAP from the low, just like my buddy Brian Shan talked about, came back, tagged that, bounce, came back, tagged it again, bounce, and now we're on the way to this VWAP right here. So it'll be interesting to see if we can get above there. Maybe that's time to recover. I think that bled down. Geez, home builders just running right into that zone.
Nail's the way to nail that one.
Yeah,
I like nail, man. I like to when I hear that.
Yeah,
like that's the stock that I like to trade it off of, right? Because it's
3
leverage. I think it's 3x even.
Yep.
But like this one has a tendency of holding a pattern too. That's the key though. You got to know the one that has kind of that pattern type of run too. So nail is one that I think is one that is good on swings. So if you look at it over time, it's really good when it has nice breakouts and comes back to the 50. So I look at this one all the time. I've studied this one in the past. It's definitely one to look at. And this is one where it's just turning around off the 9 EMA. Doesn't mean that it's going to make a big move. You got a reversal off the 70. I think tomorrow will be the big day if it can get back through 80. But look at that change. That's right. $10 swing from the ups and downs. Tells you more and more when you're using daily levels combined with swing levels, how you can make some good risk to return, right? In this case, maybe risking $2-3 for a $10 return. It's never going to be a bad thing in my eyes. So I think that, one of the things to be thinking about in these environments also is swing trading for you or is day trading for you? I know this is mainly a day trading stream, and the main part of that is that it's in the beginning part of the day. I know Michael and I would open more swing trades, but a lot of the times I open those near the end of the market, right?
Pretty much exclusively, yeah.
And there's a reason why, right? Because we're also watching those daily candles, especially. How has the intraday gone? Did they scare out and then the daily candle still looks pretty dang good? Well, then I'll take it, right? They got scared out. I'm willing to take it off of the daily chart here and go for a bigger swing. All things to be thinking about. This is why you got to be thinking about what's for you, day trading or swing trading. You have the swing trading accounts that you can go after, right?
Well, and ideally both, right? So in a perfect
I like
world,
that. That's exactly what I try to do, right? I think in finding ways to make money in both, right? And this is where it gets tough, right? Because you're gonna have to wear multiple hats. So I think for the beginner, might not make sense for you, right? Let's just be honest. It might not make sense for you to learn all the day trading stuff, all the swing trading stuff, and then you're probably managing your investment account at the same time. Well, that's going to be very, very difficult.
That's a lot.
You can do it. It just takes years and years of experience to do that at a consistent rate, right? You can get lucky. We all get lucky from time to time. But
well, and I think I'm a perfect example with that, right? Where I came into this being someone who makes my bread and butter through swing trading, and that's exclusively what I do. When you talk about entering and doing all that stuff in the close, that's exactly what I do. Is I wait. There was times where I don't even look at the market until an hour or so into the close, and then I'll put in everything that came from my systems, my algorithms. Then, because you're right, you avoid that choppy nonsense that doesn't help you as a swing trader, but generally can help you a lot as a day trader. So, when I was thinking about, coming here and chatting with you guys, I was like, yeah, it makes sense that I would in the morning do a couple day trades, hopefully make a couple bucks with that, which is why I'm sticking to this profit target. I'm having trying to develop a scalper's mentality of get in, get a couple bucks, move on with my life. And then knowing that the swing trading is, again, where the real kind of wealth creation for myself is. But yeah, so ideally you do both, but you're right. The complication is, again, that I'm feeling is the ability to change those hats, to go from someone who, if I'm right on, if home builders end up holding and I buy something like Toll today, at this support zone, I'm risking, like, this is the trade that I'm kind of thinking. Say we close right here. Oh, that's not that. Where is the little risk reward guy? Anyway, we hold. I'm looking to buy kind of right in this zone. And if I'm wrong, my stop's going to go below yesterday's candle. So that's my risk. And then if I'm right, I'll hold this thing for days or weeks or whatever. If we get back to the 50-day moving average, that's a massive risk reward profile. That's way different from day trading, where you're trying to get in. You're looking for, 1-to-1, anything better than a 1-to-1 risk reward. You're trying to just scalp, take some money, and kind of move on with your day. It's a different mindset. So yeah, if you're new, don't go into both. Try to figure out which one fits your personality. Kind of get consistent with that, and then look to branch out. At least that's my style with it anyways. We'll see. Someday I'm going to come in, I'm going to say I passed this account, whether it's I'm completely gray by then or still just partly gray as I am now, who knows. But more styles, the better, as this market is going to be, if it's going to be crazy for the entire year, the choppy like we've been talking about, I imagine my pullback strategies combined with day trading is going to be a really good way to do it. If we were just trending higher every day, that might be something that's a little bit harder to do from kind of a day trading side of things.
All right, guys, I'm going to take a shot here on the main account here. I'm going to take the trade, but also I'm going to tell you guys the setup. I took the trade right now, and now it's more about just set it, forget it type of trade, right? This is on the funded account. I'm having the mentality on ADIL about earlier. I talked about it when you saw the show open up. When I talk about on ADIL, looking for washouts towards the 83 and the 86 to recover the 9 EMA and then make the attempted move higher. This is also a look on the 15-minute chart. So if you guys are looking at what time frame I'm looking at, that's what it mainly is. It's kind of like a washout of all this early buying and then coming back. So the psychology type of strategy here, looking for it to come back through $1 and then get back to the pre-market high, which is 145. So big move there. If it gets back up there, we'll see if the volume comes in. That's what's been missing out on this. So I'm looking to see if we can get that volume type of move now, where we get the volume to come in like we did at the opening gates, where volume was at 9 million, right? So we'll see what happens there on ADIL. I was also battling with WAFU off of the $4 look. So it was right there on the $4. This is a similar type of strategy where I'm looking back at the time frames. I'm looking at prior resistance and it's going to become support. And this is one, of course, that I missed on the first action. So that's another reason why I kind of stayed off of it, because I feel like I have a little bit of some revenge trading action mentality on this. And I catch myself as an observer. I'm like, well, Mitch, go with the one that you thought was more the clear setup prior to this. And then that's why I'm going back to that ADIL. You guys see it. I'm long 300 shares. We'll see what happens here on ADIL. That's going to do it for me, at least, guys. I did take a max loss in my other eValve, at least the funded account. Staying safe, especially on a day where I just came back to the market, right? The number one thing you don't want to do is just destroy your mentality. Another thing to think about is I can't let my eValve drag my funded, right? This is the hard part of being a prop trader and continuing to do eValve battles. Shane mentioning in the chat that he's able to now make a good $2,000 on the funded account today, and then he's taking the cash and running. Things like this are so important. Once you get to the funded, which we're all looking to do, right? At the end of the day, that's what we're here for. And we're all trying to make that cash. The important thing is making the cash, right? So for me, I can't let the Valve thing kind of frustrate me, right? If I got to open a new one, I'll open a new one. That's literally how you have to have the mentality. But it needs to be about what? What strategy and changes do I need to make to continuously get to the goal and then pass the goal and get funded accounts, not only funded, but then paid out, right? So, hey, take a look into your trading. Take a look into your eValves. What do you need to change? Focus on that, guys. It's not about one day. It's about how we actually make the change that adds up to the goals that we're all looking to do. At the end of the day, we're all just trying to get paid, man. I can't blame you. I can't blame you out there. So just keep working at it. And soon you could be one of those guys walking away with the money bag, baby. All right, guys, that's going to do it for us. Michael, any last words for the traders out there that are all panicking in the streets? The Bears are singing. What would you tell them?
We're down 3%. It's a very healthy pullback in the overall markets. Let's see where we close. Until then, it's just kind of noise. And then again, join us tomorrow for more of this kind of craziness. And then on Thursday, I think will be the real day where NVIDIA earnings are out and we can see kind of what's really happening in the markets.
All right, guys, that's going to do it for us. Like always, catch us tomorrow right here. Don't go anywhere and hit that subscribe if you're not subscribed already. If you're out on X, I want you guys to hit the comments. Let us know what you enjoyed about the show. Maybe a stock that you traded well. Let us know. We want to know about your trades also. We'll be back tomorrow, just like Shane making some cash in the chat. There's always somebody cashing and trade the pool, and that's all I need to hear, man. And that's what we're here for. So we'll see you back next time. For everyone and all you guys out there, keep pushing. And yes, we love it. We love it. Get that trader, Brad. I see you out there, my friend. It's good to see all you guys in the chat. We'll be back tomorrow. Hit the like before you get out of here and tell us how we can expand to keep going and stepping up the game here. That's what we're all about. See you next time.